All right. It is 2:30 Central Time. So hopefully everyone here um is okay, let's see. Same, I'm in it for the long run. Nope. Let's see. Sorry guys, just making sure the live stream's running through. Oh, loud and clear now. Thank you. Got that delay there. So, um, yeah, I got the screen up actually here for Palantir. Looks like we had a red candle actually just recently. But thank you all for joining. We got the Q3 live stream 2024. I got a bunch of stuff to cover, I guess, leading up to earnings. And as you can all tell, it's 2:30 Central Time for me here in the bottom right corner. So market closes at 3 o'clock. Earnings for Palantir today is going to be coming out after market close. And usually it's not immediately. So if you've watched previous live streams or if you watch just to refresh the page yourself, it usually comes out maybe 15 minutes after. So we'll keep an eye out. And, a lot of other news sources like to spill it a little bit faster, especially if you have a Bloomberg terminal. So, but thanks you all for joining. I know we got a bunch of people who've been excited for this. It's been a whole quarter. Not talking about the live stream, but if you're excited for that tool, of course, thanks for joining because I don't do this often. But of course, results, right? And this is really the biggest marker I'd say for Palantir every time in every part of the year, right? When it comes to what's going to justify their valuation, how's their business doing? This is the official record, and for me as a longer term investor, right, this is actually the score that I like to keep track of. It's nice to get the PR. It's nice to see the interviews. It's nice to get even those underground kind of stuff, right? When you say, oh, we got a deal here and it's not the typical news source. But honestly, earnings is what I like to keep track of as the most informative and most trustworthy information considering it's, the actual results from the company. But on that note, it's important to note that this is delayed information. We're already in November, so this is for Q3. So that's already the end of September. So it's already been over a month of information. So maybe during the earnings call we can get some snippets from management. And sometimes we do hear things, but nothing actually as significant as I've heard in the past. But if they're giving out guidance, technically they do have some insight into how the quarter is doing already for Q4, at least 1/3 of the way. So thanks for joining. Yeah, it looks like the numbers are going up pretty fast here. Thanks all for joining. And let me know in the comments. This is probably going to be a long live stream, so I've got water here with me. Maybe I'll get some juice later. Got to stay on my A game, of course, but just let me know what you're drinking or if you're relaxing with something a bit more mature, let's say. It is 5 o'clock somewhere, of course. Technically, it's still working hours here out in Chicago. But thank you all for joining right now. I know it's the middle of the workday for some of you, but if you're off at these hours, it's kind of nice to be able to see the earnings as they come out. So actually we have some downward movement here. Just very small, kind of quiet day for Palantir, as well as for the overall market. I'd say I think it's flat for the SPY today. But we'll be keeping track of this just as we lead up to the market close at 3 o'clock. And then right after we close, usually if there is any expected volatility, it'll probably happen when the information is out there. And I know this is more of a long-term focused channel, but for these kind of days, once a quarter, it's not bad to, look at the excitement of the minute by minute, second by second price action movement. So cool. But there's a lot of information to cover before we even get the results. I've released a couple videos already leading up to this information just because, some people don't have the time to get on it live. But essentially, we have the main metrics that I'm interested in, and I think personally will be the main drivers for any price movement or just any conversation in general when it comes to the performance of Palantir and justifying their valuation. And then also some of the questions that we had, and everyone hears the dividend question every quarter, which I have my own opinion about, and I know a lot of people definitely have a similar strong opinion of why do we even need to hear this. So, but we'll do some more review beforehand just so we have fresher numbers in our head. I got the Q3 of 2023 here for comparisons of what we're going to see as well as what happened last quarter, since that'll be interesting. So one actually piece of recent news too, and I saw this when I was scrolling through X. I did see that Palantir's name made it on a pretty big company's name or announcement, essentially. So if you know Meta or formerly Facebook, there's a bunch of names here, so it's not just Palantir, of course, but it's still pretty interesting to have them come up here officially. But basically, for Meta's open source Llama models, they're trying to expand and broaden who can use it and the ways that they can be used, essentially. And the specific ones they give up is researchers, entrepreneurs, developers, and government bodies. And government bodies really sticks out when you hear about some of the names below. And as you can see, we're partnering with companies like Accenture, Amazon, AWS, Andrew Booz Allen, Databricks, Deloitte, IBM, Leidos, Lockheed Martin, Microsoft, Oracle, and then we get Palantir's name, as well as Scale AI and Snowflake to bring Llama to the government agencies. So this is not surprising. I would be more surprised if they did not put Palantir's name there, especially for the more recent kind of news about Palantir's really strong focus on the government. And they've always been focused on the government, of course, even if it's at the detriment to certain financial aspects to it. But that's actually something I wanted to talk about as well for the earnings preview. But at least on topic for Llama, as well as with Meta, this is just another piece of evidence that shows that Palantir's, one of the players to look out for, especially when it comes to AI. And the other side of the AI market is who's building out the models, who's going to have the best model. But then the other side of the coin here that Palantir is very, very focused on is how are you actually going to use these models in a useful, valuable way, and ensure that you do it in a safe manner. They didn't really talk about the security aspect here, but I'm sure it's more implied considering the government agency side of things. So this is a pretty big piece of news, I would say. Not actionable, of course, right now, but I think it's just more evidence that shows Palantir is really a player to look out for when it comes to implementation of AI and making it actually useful. Now, the other thing I want to talk about, and it's related to government, and I'm not going to get too deep into it. Essentially, the election, that's the elephant in the room, literally tomorrow. So if you haven't voted, go make sure you vote. I don't care who you vote for, or who you abstain from voting, but essentially you should be voting and exercising your rights here as a U.S. citizen, and being able to participate in the election of the next administration. I would say at a federal level, actually, it's not as impactful to your everyday life, and I have my own opinions on that. And obviously, at a local city, county level, that will probably have a more immediate impact on you. But briefly touching on that, though, I think it's important to point out that whichever administration wins, my opinion is that Palantir is going to be fine either way. But what can happen is that maybe certain aspects get more or less focus. And I did actually make a video on this a while back. I believe I have to remember the name, but essentially, let's just say that a more domestic focused administration wins, and you guys probably know who we're talking about, but that doesn't mean we stop everything that the United States is doing around the world. And we know government, at least the government wise for Palantir's business, they do a lot of work with our allies, of course, and in Ukraine more specifically, even if they're not in NATO right now, but these kind of names come up, right? We're working with partners out in East Asia, on a military basis, and maybe there's going to be less focus on that if a more domestic focus administration wins. Or maybe the other one who's more, let's say, in tune with the established protocols of how the U.S. has operated before, which means a lot of foreign interference or support, let's just call it, then maybe that'll accelerate for Palantir's business. But it doesn't mean we're also going to stop on the flip side, on the domestic side, right? Palantir has done a lot of work with different agencies, and we see this all the time with let me see if I can get one that's more recent. For any of the PRs, essentially, but well, I guess this is always easy, right? The U.S. military, and this will apply to them continuing to have any conflicts abroad, but also just defense in general for the for the country, but also if there's any other non-military related ones that I know that I bring up the NIH all the time and the research that they do. And yeah, even if we cut funding, let's say to certain activities abroad, domestically, Palantir still has a stronghold in this marketplace, at least for the domestic business of the United States. So that's my short spiel, at least for the election and Palantir. And we'll see, right? And essentially, we'll have to see what happens over time, even if there's a different executive leading up the country. And we're going to have a new president regardless, and administration based on the two candidates. So that's the election. Not much else to talk about there, at least Palantir wise, in my opinion. Now, let's just see here. Just looking quickly at Palantir. Yeah, so it's a pretty quiet day still. We have 18 minutes left in trading for the market. And I guess since we're on the screen here too, I know what a lot of people want to talk about is valuation. So right now we're on a $90 billion company, 2.5 billion-ish revenue for full year, most likely. Yeah, so multiples wise, that's rich, and it means that there's expectations for the market that they will grow into this valuation to something that's more reasonable. But we've seen over many times, right? Many tech giants that have stayed overvalued. It doesn't mean that they're not volatile, though, right? So they can still compress in valuation and multiple. But that's something to look out for when it's a name like this for Palantir, where expectations are really driving the valuation here. And that's not a bad thing per se, too, because we're forward-looking markets. If we already know information, we don't necessarily need to wait till it happens to act upon it. So that provides opportunities where some people may believe that this is a spot that they will grow into, and even if they stay flat, they want to build their position over time. But others can see it as dollar cost averaging, don't need to think about it. I buy less shares at this kind of valuation. And then say if we do feel a pullback at some point, they'll obtain more shares just because they're dollar cost averaging. So it's definitely much more in tune for short-term traders, how they feel about the pricing at the moment. But if you have a long-term mindset of this, especially multiple years, and at the spot that Palantir is today, when it comes to they are proving growth, or at least showing the signs of trying to do that, then it's possible that for some people that they're okay with buying up shares at this price because they believe that they can grow into it. So that's just a quick spiel there, but we'll keep reviewing this as we get to the closing, especially for after hours. I am very curious to see what's going to happen right when the news hits. Now, the other thing I want to talk about was the theme of Palantir throughout the last quarter. So we're going to get our results. This will be interesting. One thing that really stuck out to me last quarter was government. So their government business actually did better than expected. Now, we're not saying that they're going to have continued growth, accelerating exponential growth or something of that nature. But if you think about it, this is kind of the bread and butter that they've had, and it's become almost like a bonus, I would say. So if we see anything crazy in regards to government revenue doing better than we expect, oh, sorry, this is Q3 2023. I'm like, well, this is not the right numbers. But that's the name of the game for Palantir. They want to make sure that they can get recognition here from the different established customers that they've had over time, and that they can actually double down and provide value to them and expand that, meaning, oh, you're a government customer with us, especially for the US, we can do more for you. We can do more for you. And in that regard, it's like, that can still be a growth driver, but I think the main narrative is still not this. So over the last quarter, I'm getting to the point here. I know I kind of babble a bit, but getting to the point is that government can be a surprise factor here. And I'm not saying that we need it per se to be exponential at some point. But Palantir has established themselves into very large contracts, very large, customers and agencies there, where the opportunity to get a big contract all at once is still always possible. And if commercial continues to perform and they grow even faster than U.S. government, which they're doing, especially in the United States side, then just keep looking this as a bonus that can boost up and be kind of the X factor of something that can beat the expectations, because we're already expecting the growth for U.S. commercial revenue. We just need to know how much faster that's going to keep on going and how much more sustained it'll be. But no one's, I think it's a sleeper for especially a lot of analysts thinking about, well, not for Bank of America though. It's very specific for them. They are very interested in the United States government revenue and the different government projects there, but something to look out for. And on theme, Palantir has been very vocal about, and this is not new information, but has been very vocal about this marketplace, right? They got the quick 30 seconds here. I'll probably lower the volume. But the quick 30-second ad, right? Navy Army game, right? Every year we see kind of what that they're supporting the United States. This is obviously just more on the side of ensuring that, you know, the marketing side of things, it's not necessarily going to be, oh, we're going to win contracts because we're showing off that we're so good. I think it's more of a long-term play, though. If you think about it, the more vocal they've been, it seems that, well, maybe my news sources could be skewed, but the more vocal they've been, it's like other companies can stand up because they see their business is not hurting at all, from what we can tell. And obviously that limits their marketplace around the world to, you know, who's a United States ally. Maybe commercial wise, they can make some exceptions, right? But for sure, right? No China, no Russia, things of that nature. Now, the other thing that caught my attention, here, we can just play it, is the L3 Harris interview. This is very recent. There's a lot of things that Alice Karp talked about. I'll just play this here. Let me just get the audio on. Okay, 1 second.
Particularly on the commercial side, I realize there's been a reacceleration in the U.S. government business, but the commercial business is really what's propelling the stock. What are you seeing, especially as you do have these artificial intelligence platform boot camps and adoption levels?
Well, look, I mean, first of all, to your first, you know, intelligent people learn from their mistakes and learn to realize when they made a mistake in the pattern. Everyone else becomes an analyst or an advisor. So, you know, people have been saying we're overvalued for the last 20 years. People have been saying our products would make us profitable, that we would not be able to become a juggernaut, that we would not become GAAP profitable, we would not get on the S&P. And, you know, keep saying that about us. We love it. It discourages people from doing anything like what we're doing, and we are winning. Now, why are we winning in U.S. commercial? Because we learned in the government that what makes AI valuable is the ability to manage algorithms or large language models. Every financial analyst wakes up in the morning, and after, with notable exceptions that we revere, really revere, wakes up in the morning, and after they stay at Motel 6, they have a huge opinion about how to manage large language models. It's completely theoretical and idiotic. If you want to manage large language models or AI, the infrastructure that allows you to manage them is where the actual value is. The large language model is essentially a commodity that you can value and use depending on cost and veracity. And they completely don't get it. But you know who does get it? Our commercial American customers. And despite the fact that we barely have a sales team and that I'm providing my pontification.
Always great to hear the passion from Karp, but I know it's a mix of talking about commercial here, but he did reference something very important about government. And this is kind of what I was alluding to when I was talking about government. And yes, it's nice to see the growth there, but it's the breeding ground for them to innovate, as well as like almost R&D, but getting paid for it, if you think about it. Now, who's willing to take on that risk? Typically a government who will overspend on certain things or doesn't know exactly what they want. But they do know exactly what they want. They just get it built out the way it is, and it'll be a cost add, right, for them to do so. But you know, they're using taxpayer money. But essentially, that's what's the beauty of their business today when it comes to commercials, that they've done all this work in the government space and ensuring that, you know, if you're able to build something that's useful at the highest levels of security, for the most important things that are happening, then maybe someone on the commercial side will find this useful. And we saw this slowly over time, especially right when they went public. But even before they went public, they talked about BP, and there's plenty of interviews there with the former CEO. But it's important to note that they were literally building alongside them and figuring this out. Now we're at a different point in time for their business, in my opinion, and we're seeing this all the time now with boot camps, as well as the way that their languages around new product releases, as well as just in general how they're running their ship today. But before, they were still developing the product, even alongside the government, even alongside their early commercial customers. Now we're at a different point where I'd say they can take this and run with it. And we're seeing the earlier signs of that, right? We need to make sure that it's actually exponential, I guess, to justify the growth rates, or the growth rates to justify the valuation. But I think they're in a much better place today than, say, when they first went public, showing off the different stuff on their Palantir developers channel, right? Let me bring that up here. Because what they've done is basically they have a use case machine now. They've increased their customer base. They've got so many different industries that they're utilizing today. And now what they can do is that they've built out something, or they've built out different modules. So it's still on the platform, right? Or the whole ecosystem of Palantir. But they found out what's actually useful. And now they can scale it to the point of like, okay, you don't have to be a customer that signs up, go through a whole implementation process, figure it out, do all the training. And maybe even Palantir's figuring out at the same time. They're at a different point now where it's like, sign up. We've done this before. And we've got customers who've ran into basically the same issue. Maybe you have certain tweaks with how you run your business, maybe different data sources or even more or less. Then you're at a point where you can scale this, because now your main thing is really just convincing someone to sign on with you. And there's even been talks about different customers not technically being customers yet, where they're on a trial basis. There's no money exchange, no contract, but they're still trying out Palantir. And this sometimes happens for months, right? And I've ran into this on X. I don't have it right now in front of me, but I've seen some stuff where people are talking about their companies, and I think even LinkedIn, I've seen them as well, where it's just interesting to see there's a lot of people using Palantir that may not even be getting counted. The one thing to note, though, with customer numbers is that you don't know necessarily how big each person, how big of a contract it's going to be at that point in time. So, but that's a really important note to figure out as well. The government business has been this breeding ground for them to ensure that they can build the best product. And now they're at the point where we need to scale it. We could keep expanding use cases, but the scale itself has actually been established where it's like, okay, we know how to already implement this connectors. If you've done build with AIP, it's pretty easy to set up your different data sources. I haven't done too much with it recently, but if you have a chance to get an account, if you're in the United States and Canada, definitely get a build.ai build with AIP. Let me see if I have it here. Build AIP. Oh yeah, build.palantir.com. Yeah, so make sure you can sign up if you have a chance. You can even use like fake dummy data or just download stuff, large data sets from online for free. But you can experiment with how that is. I mean, for my daily work, I'm basically cleaning data and then running analyses and building dashboards and visualizations. Getting rid of a lot of that prep work is what I like the most with Palantir, but there's a lot of other solutions with that. But when you get to the point of implementing artificial intelligence and different models and then comparisons, I know AIP evaluations on their developers channel, that's a really useful tool. I think a lot of folks are going to start using at their organizations if they have Palantir, because now the decision making becomes much more than just, okay, let's try this out, see how it does. Let's try this out, see how it does. It'll become more of the point of, oh my gosh, I know exactly what this is fine-tuned to do versus that. I think we should utilize this model more. It's costing this much more for us, or it's this slow, things of that nature. So there's a lot of things that are exciting for Palantir. And maybe in their call, they'll reference some of those things here too. Now we're getting closer to market close at 2:55 p.m. Central Time for me, just so you guys know. Let's just see where they're currently at, 41.35. So looks like we're testing those intraday supports. Actually, this is a monthly trial. Let me just see what we did for the day here. Okay, it looks like in the morning hours. This from... Okay, so essentially we're going to close down here 1%, 1.5%. It looks like a large amount of dollars nominally, but if you've been around Palantir at what, $6, $7, $8, that would be a ginormous percentage if it was 60 cents. But at $41 a share today, it's quite a different story for everyone. Yeah, the SPY here down 0.3%. Cool. Let's get to the presentation from Q3. So even though market closes every time, it doesn't come out immediately, but right at 3 o'clock, I mean, I can always just double check, but yeah, they'll never release that information right at close. No, they won't. Okay. Yeah, it's 2:56. So we'll see you right at 3 o'clock. And also another thing before we get into the presentation from last quarter, just looking at the CEO letter, the reason why I like the CEO letter and looking at it each quarter, essentially, at least to me, this is what I think Alex Karp is very focused on or likes to show off. And we do get some different visualizations as well. So, like for example, here, right? They do the growth rate exactly as what it is, right? You're not comparing numbers. So this is the main narrative I think everyone is looking out for, myself included. Alex Karp showed this off last time. And this is the quarterly revenue growth rate. So top line growth, they talked about 30% at one point, long time ago. But even if that's been long gone away from presentations and being talked about, I think in the back of everyone's mind, 30% is like, okay, are we going to get to 30% and is it going to be sustained or is it going to be actually accelerating from there? But this is a nice chart, right? Q2 2023, 13%. And we've seen progress each way and bam, we get a big jump. 21% versus the 27% now. What I think a lot of people are going to look out for is, are we going to at least be above 27% here, hit 28? For me personally, if we're going to run into, I mean, they do sandbag their guidance in my opinion. And I can show that actually here. So what's projected, I believe, is 25 or 26%. Let me just double check here. Oh yeah, so Q3 2024 guidance. So revenue between $697 and $701 million. And then if we have the revenue right here from Q3 of 2023, let's see, 558. So low end, let me bring this up. I'll do the math in front of you so I don't look silly doing the mental math. So if we're just let's just say they hit 702 right above guidance, because that's what they always do. Or they do better than guidance or sandbag it versus the 558. Let's see, 558. Yeah, 144 over the 558. Yeah, so that's 26% if they can hit only 702. That's still great, right? And I would take this over any day happening versus, if you remember, 2022. And from the CEO letter, as you saw, even that 13% at one point. That was a very interesting time considering what is going to happen for Palantir's business. And then we get pretty big news. I think it was late 2022, right? I might be mixing my dates and years up, but OpenAI, ChatGPT takes it by storm. Everyone's like, whoa, what's artificial intelligence? At least in an applicable way. We've talked about it plenty of times when you think about, I don't know, Terminator and the singularity. But an actual application, everyday normal people can do, even though it's just chat, right? It's not that interesting in my opinion. But being able to streamline processes in the back end, and that's the first thing I thought of when I thought of Palantir, right? What are you going to utilize with an AI? You're going to be able to do an AI that implement an AI that can make decisions because of A and B and C and D happening all around you. What's the course of action that needs to be taken, or at least what's recommended, or what are the recommended options if there's multiple ways to go about it? Their platforms have basically been designed for that, where you want that human input. Now, we'll see if this will continue here, but I believe, yeah, usually they've been beating out their guidance here. So if bare minimum, at least be above their guidance. I don't think the market will like that necessarily. We're at 3 o'clock here. So if they're right above guidance, that's at 26%. But if they can at least be above the 27% here, continuing to at least, you can say technically, oh, the trend of revenue growth quarterly is growing. That's going to help at least. But I think it seems like a lot of, and this is just me feeling anecdotally, it just feels like a lot of people want them to blast this out and really destroy not destroy like in a bad way, but really knock out of the park their growth rate. So we'll see what happens. And 3 o'clock here, let's see where are they closing at for the day. $41.44, down a percent. After hours right now looking pretty stable, a little bit up 0.5%, so it's not that much. I think once we see a spike, if we see a spike, that's definitely going to signify when the earnings results are out. I'm just waiting to see how much longer in between it's going to take for them to do that. Let me just do a quick refresh. Nothing here. I don't want to see Kevin's face. All right. And then just double check here. Oh, yeah. And for those who haven't watched in the past too, for the webcast, I will play that. I'll keep my mouth shut. I'll do my best to do so. I'll take notes during that time period. That's going to take place at, I believe, 4 o'clock Central Time. So let me just double check that. 4 o'clock. Oh, yeah. 3 p.m. Mountain, 5 p.m. Eastern. So that's 4 Central Time. So when we get to that point, we'll have the numbers at least, and you guys can, do whatever you want. You can look at the presentation throughout ahead and just soak in that information while management's talking. I'll be doing the same thing, of course, but I'll be playing it here on the live stream. We'll all listen together. And then right after, I'll give my thoughts on probably what the heck just happened, of course, on earnings, and as well as anything standing out to me when it comes to their earnings call. The first beginning is just going to be them going over the results, of course, but Alex Karp getting the chance to talk, doing his whole intro. I think a lot of people are going to be curious to know, is he going to be banging on the table, right? But I don't see that as long as they continue to deliver and keep the trend of what's been happening the past few quarters. So that's going to be very exciting. So this is the ticking time bomb right here. 3 o'clock Central Time. Just trying to see when that information's out. And also let me know in the chat too, if you guys start getting information coming out, I can pull it up here. I don't know if you can send the link though, but just at least let me know if it's Googleable. And I'll be able to share that on here as well. So usually someone on Bloomberg Terminal will be able to get a screenshot, or maybe I think it's PR Newswire. They sometimes get it like a minute or two faster, or at least it's published faster. Palantir's job is keep making great software, not necessarily being the fastest at posting something on their website. So I'll keep an eye on the chat though. Let me know, or spam it there too if I don't start to notice it. So the multitasking does take an effort for me. So now that we have the presentation open, it can happen any second when we get the newest quarterly results. But let's check this out. So I made a whole video. It's pretty quick on what I'm looking out for, and it's not like anything groundbreaking. You guys will be not surprised too, right? Everyone, in my opinion, is going to look at revenue growth. That's the given. And then we're also going to see the breakdown of that growth between U.S. commercial, U.S. government, and then even the international side. I think it's always interesting. It's not going to be the make or break, in my opinion. Everyone's really focused on the United States government and commercial revenue. The other thing to look out for, deals closed. So this is not going to make or break, because when you look at deals closed, it doesn't necessarily, it doesn't mean that this is all for 1 year. It could be multi-year deals, but it's a good gauge, at least, of how they're doing in getting people to sign up with them, getting it officially on the books. I believe this also includes renewals as well, just so you're aware when they close deals. But I like to see this number not be bad, of course, and show anecdotally that their business is still able to get people to sign up. The other thing too, customer count. So all the focus, of course, is U.S. commercial customer count. I just want to see them keep getting customers left and right from anywhere, essentially. I want to be able to point to them like, oh, they have a scalable product. They can do this. Price starting to climb. Oh, I just saw that. Let me see what's happening. All right. Up 8% in the mark. Someone knows something. That's interesting news here. All right. If someone knows where the information is, just let me know. Just so you're aware as well, $44 right now. So we did actually hit $45. Was it last week? Let me just double check. Yeah, we were in there in that $45, trying to really close above that. But this is interesting. I don't have the information yet now, but I think this Might mean there's something good and exciting here that someone knows about. Yeah, probably the Bloomberg terminal. Someone has that information. Let me just do a quick refresh on maybe Twitter. So people like to post pictures on there. All right, let's see. I'll just look up Palantir. Maybe I'll look up the ticker symbol. Okay, let's see what's there 3 seconds ago. All right. Palantir earnings, EPS 10 cents versus 9 cents, revenue 726. Actually, I was hearing that number floating around. Let me just see if I can get an official link. If someone knows where I can get the information. Let's see. Stock Titans. No, that's not a. Wait, is it on the investor relations? I'm refreshing it here. Just let me know if you guys see it somewhere. Yeah. Oh my goodness. We are hitting 46, just flying past 45. Looks like they want to test 50 at this point. This is really exciting stuff right now. I want to see the official numbers. That's the thing that I'm most excited about. Technically, it's all new noise, right? If you're a longer term shareholder, but I think following this once in a while is really cool to see. 37% revenue growth. Okay, where's the link? Just reported earnings. These must be from people's Bloomberg terminals. So, 726. What was it? 558 last time. Yeah, that would be 30% if it's exactly 726. Oh, here we go. Palantir. I know it's not on their website yet. I know it's kind of slow. So let me just do one more time. I like to see the. Okay, we'll go off Palantir's Twitter post, and this is probably much easier for them to push out fast. So Q3 2024 revenue growth 30% year over year. This is huge. Symbolically, first, narrative wise, they beat their sandbag guidance. That was like 26%, whatever. Last quarter, 27%. The narrative continues. I just showed you Alex Karp's letter, 27%. Now, maybe there'll be a new chart with 30% here, but the narrative continues that they are continuing to see revenue grow, top line. They can get people to sign up and actually pay them money. This is huge. Now, does this mean that they're justified at $100-something billion valuation? I'll leave it up to you if you believe that. Right now, they're still hovering around this point here, trying to figure out 46-ish dollars. Wait, how do I get the candle to show? Okay, either way, I could see this. $46. Okay, now we're above $46.50. We'll continue to see. Now, AI demand that won't slow down. Okay, they're saying it themselves. They think it's going to keep on going. This is very exciting stuff. U.S. commercial revenue grew 54% year over year and 13% quarter over quarter. And U.S. government revenue grew 40% year over year and 15% quarter over quarter. Oh my goodness. Wait, U.S. government, 40%. Yeah, this is what I was talking about. This is bonus material for us. If you're doing really well in the government side of things, U.S. wise, I'm all for it. U.S. government revenue growth. So this is from Q3 2020, Q2 2023 to Q2 2024 is 24%, but they're pulling off a 40% here. Okay. U.S. commercial. Let me just double check that one. So it's 54%. It was 55% last time. So, the baseline is still technically higher, I believe. So it's harder, even if it's technically the same constant growth. If you're growing just as fast with a higher baseline, that's also great to see. Let's see. Operating margin, 38%. This is massive. So they're growing the top line. They're able to keep more money. And their rule of 40 is now 68%. The rule of 40 last time, right here, 64%. And this is already awesome. That means they're able to expand this. Now, year-over-year growth revenue is going to be a factor in this. And then their last operated adjusted margin was 37%, now 38%. Still continuing to trend upward in a positive direction. That's amazing. I mean, like I said, there's technically it's an expensive name, but they're proving that they can get more dollars in, and they're keeping dollars more. And, usually maybe you'll run into some issues if you're running a business yourself, like, oh, how am I going to serve my customers? How am I going to be able to scale this up? It might cost me a bit more in the short term, but either way, they are able to keep their money while getting more money in. And oh, I think I just saw a question. What's the rule of 40? So essentially, it's the addition of these two metrics here. Think of it as like for SaaS software, where you want to make sure that, oh, is our business sustainable? Are we growing fast enough? Things of that nature. So this is the adjusted operating margin and the year-over-year revenue growth. So it's not necessarily a real metric, I would say, but it shows that if your business is doing well in both of these, above 40%, then that means you have something that's a pretty good SaaS product. Now, we also generated $1 billion in adjusted free cash flow on a trailing 12-month basis with $435 million, 60% margin in Q3 2024. GAAP EPS 6 cents. So I don't necessarily care about this. It's not the highest. And then for full year, they're now going to expect $2.85 billion and then $42 to $50 million above analyst estimates. So they're revising this here. Last time for their full year guidance here, revenue between 2.742 and 2.750 is now 2.8. Yeah, so another 50 million above that information. So let's see what the market is doing right now at the moment. 47. All right. This is making its way 14% up right now on the new results. Let me just see if we can get that presentation or the other information, at least the highlights here, because we can get more juicy information from that. Not yet. I mean, someone's got it somewhere eventually, but this is on Palantir's official Twitter page, so this is good information anyways. But let me just see if we can find other snippets. I mean, they hit everything that they exceeded way past, I think, most people's expectations. The 30% is huge. But even still, with their adjusted operating margin, they're still able to keep their dollars coming in. So if someone said they can't scale, I'm not sure why they would say that before. Oh, yeah, businesswire.com. This is the one. Cool. So this will be the highlights, and it'll show up on their regular page here eventually. Yeah, it's so slow. Either way, this is the main highlights that we already covered. Closed 104 deals over 1 million. I believe we saw last time it was like 90 something. Let me see the over 1 million deals. Closed 27 deals over 10 million. Oh wait, that's different. There we go. 96 deals from Q2, and then this one we've continued to go up 104 deals. I'll be interested to see what the 10 million one is, considering they didn't share that, at least as a huge highlight here. Now, customer count grew 39% year over year, 6% quarter over quarter. So 39% from where they were. Yeah, customer count was, oh no, trailing 12 month. Let me just double check that. 6%. Okay, so consecutive wise, this actually went down quarter over quarter. So 6% of the customer count. Okay, I got to close this. That's US commercial. Okay, so 593. Yeah, so 6% is not a decent. I mean, yeah, it's a slower sequential quarter here. If you saw, it was 7%. 593 times 1.06, 628. So 628 or 629 customers right now. GAAP net income 144 million. GAAP income from operations, adjusted income, rule of 46.8%. We already saw this. EPS, of course, is still positive. That's what matters most. $4.6 billion now of treasuries and cash equivalents. So no issues with them having bankruptcy or anything around. If they have a bad quarter for some reason, need to do a one-time expense, they're fine. If they have something they want to purchase, who knows? That's pretty interesting. Not saying that they're known for doing acquisitions of that nature, but it's always an option. That's the thing with cash. You want the options. And while we're in this current rate environment, it's not the worst thing in the world. If we're sitting at, I don't know, 0% funds rate or something, Fed's funds rate, then yeah, that's why everyone's spending their money out of the wazoo, because they can't sit on it. They're losing money by sitting on the cash, but at least the cash is maintaining some of its value in this interest rate environment. So Palantir is set for that flexibility. Cash from operations, $420 million. 58% margin, $995 million on a trailing 12-month basis. Cash from operations, this is important. It means that when you're running your business, you are actually able to be cash flow positive. And of course, there's other expenses that can happen, but their adjusted free cash flow is $435 million. Let me see. I keep flipping here because I like using the official one from them. All right, let's look at the stock then. I know I keep flipping back and forth. We were at 47. I know at one point we were above 47. We'll see if this sustains, but this is exciting information. 4 o'clock is the time that we're gonna see for Palantir's webcast call. It's on YouTube. Let me see if I can get where's their channel? Oh yeah, you should watch this one right here. This is an awesome live stream. My humor is pretty silly. All right. Live here. Let me just see if they have anything. Okay, so it's not up. I'll get a notification since I'm listening out for them. Now, we go back here. Okay. So let's keep going on the Q3 2024 financial summary. Top line 726 that we know 30%. Still very beautiful to see it here officially sent out now for everyone. These are all the big things, 6 cents gap. What I'm interested actually about too is any information on buybacks. Not that I'm expecting a large amount or if they're continuing, because depending on what they're doing, I'm not saying they believe it's overvalued if they do no buybacks at all, but how many shares you can retire, essentially, it's not going to be as efficient. So I'm not sure if I even want them doing buybacks at this point in time. But I guess based off the market action today, maybe I guess it would have made sense. We're still sitting at the 46.90 point. CEO letter here. Oh, I'm supposed to register for this? That's usually on YouTube. Maybe I didn't read this closely. Okay, well, either way, we'll see when that comes around. That's going to be 4 p.m. Central Time, 5 p.m. Eastern Time for the live stream. So we'll get some more explanations there. But let me see the CEO letter right now. Oh, yeah. So they gave the link, but it's not live yet for me. Let me just double check. Am I reading the right thing? Full year 2024. Yeah. Oh, it's not available yet then. So it will be soon. It's August 5. This is from last quarter. But I'm assuming when it posts in here. Okay, still refreshing it. Let me know in the comments. What are you guys thinking right now? Are you doing something right now in the after hours? Was this what you expected? Was this not what you expected? We're sitting at around $47 right now. I believe that will be then all-time highs that we've never seen. Let me pull this up. I can get the all-time max here. Look at this. Well, for closing, we're definitely way above closing. That's already been established. Now, what's the intraday here? Oh yeah, this intraday is 45. Yeah. So we already beat that intraday high too as well. Now, if this opens up as we expect for tomorrow, or at least a similar pattern to what we're seeing today, then we'll be at all-time highs. Obviously, we all want to see if it's going to be sustained. What's management going to say, and how is everyone going to react to that? Is their business going to continue seeing this? I mean, based off what they're saying and their optimism and the metrics we've seen trending of the past few quarters, it doesn't seem like there's any reason to be concerned. What I'm actually super surprised about is that government side of thing there, when I think is 40%. So that's actually the biggest surprise to me. I'm expecting their U.S. commercial to grow, keep growing, keep growing. This is 54% versus, I believe, the 55%. But this 40% here, year over year, is just, this is the growth driver, it looks like. So that's awesome news for Palantir. If whatever happens tomorrow for the election in the United States, we'll see if this is going to maybe spook investors or actually make them much more optimistic, depending on who wins, who loses, and all that stuff. So let me get the chat out here too. I pop up the chat because it's off to my side screen, so I can't necessarily see really good. Okay, so some people expected a slump. $44 call. Oh, well, that sounds good for you then. I'm assuming it's a $44 call, unless you're talking about selling a covered call. Then say bye to your shares. But we still have a week to play out for if it's expiring soon. But kept hearing dip, bought more. I bought 1 week before earnings. Okay, well, nice to see some timing here. Very pleased with the results. Yeah, I would be too if you see some results within the first week of buying. It looks like you're probably going to have. So if it's within 1 week, actually, that's when we were at the 40. So actually this week or last week was, if you were purchasing it last week, then I guess it worked out then for where we're sitting. Now we're below 47 again, still in double digit percentage after hours action for the stock. Probably going to pull back a bit tomorrow morning before spiking. I think Wall Street's going to be disappointed in the EPS. Yeah, that's interesting. I just feel that like it's already common knowledge at this point. It's like, why are you going to pay attention to EPS besides, for them at least, keeping it positive for their S&P inclusion? But I get it though, right? By traditional metrics, your earnings per share, GAAP net income, of course, is what you're truly making as a company. Now, in modern day investing, and we've seen this with basically all the FANG companies, starting in the dot-com bubble, and then the survivors and what they've grown into today. Especially in Amazon. If you think about an Amazon, like I just remember when I was a kid, essentially like, wow, people keep talking about how expensive Amazon is, how big it is for what they're bringing in profit wise, but they're just driving money back into their business throughout the last couple of decades. And they've been bearing fruit, at least in the valuation, because they're just so scaled out. So it's just really interesting to see, is EPS actually going to matter at this point, besides being positive for and being, I guess, some buffer essentially to ensure your S&P inclusion. But if you're a bear, regardless, as an analyst, you're always going to find something to point out to. If that's something to point out to, it's probably EPS then, as you're noting. Which pres is better for Palantir? Yeah, I talked about this earlier too. I think either administration is going to be fine for the long-term business of Palantir, but the nature of the kind of work they do with the government in the short term might or might not feel some fluctuations. I mean, you think about the administration changing every 4 or every 8 years, but there's a whole unelected, hired government body, essentially machine, that keeps on running. Deals in progress, money being spent, always being spent somewhere. Someone taking money probably, but but essentially for Palantir, I can see them doing fine in either administration, but the way that it manifests might look a little bit different. Like, military deals may slow down, may speed up, or maybe domestic policy is going to force them to serve, different agencies in a more internal way. So we'll see. Yeah, it doesn't matter who wins. Was short, forgot to do to the moon, Carp. Oh yeah, I mean we know this too. Carp very vocal on his side of things. Business wise though, it's gonna be pretty obvious that I guess depending on how you define a Democrat today is very different than how you saw a Democrat maybe even maybe not 10 years ago, but probably at least 15 to 20 years. It's definitely different than how you identify a Democrat today. But also you can make the argument, people look at the extremes on both sides. So like the way we view a Democrat might just be skewed, especially with social media. But Carp being behind Kamala, or Teal behind Trump, Joe Lonsdale behind Trump, it doesn't matter, I'd say, in the long-term things. But we'll see. We'll see. And should have bought back in 2022. Oh, yeah, 2022, definitely for sure. That was Interesting time to be a Palantir shareholder too. I think a lot of folks were maybe discouraged. It's more of like I don't want to look at my portfolio kind of thing. I believe in the company, but you can make the argument when you do look back now with all the progress they've made, especially with AIP, that yeah, things were not actually that good for Palantir product wise, industry wise, because yeah, wasn't necessarily taking off. We didn't have AIP and all those things. Their newest product was Apollo, and everyone's like, "What are we going to use this for?" Right? It's not like it's useful, but I think the sexy overlaying, like this is going to drive huge growth, that was not a part of the story then. So totally different place from where we are today for sure. Let's see. Okay, things are starting to level off maybe right now. We're at the 46.70 range. But I think the next big kind of movement we'll see if it happens will be during the earnings call. Let's see here. What I'm curious about is actually what are other folks thinking about Palantir? If we go to any news segments, I believe $45 long-term potential. Oh, this is during the day here. Yeah, you see all the typical Palantir stuff. Okay, so nothing breaking yet here, but I'm curious to know, guys, in the chat, what are your thoughts about what are we seeing right now, price movement wise, or in the earnings results yourselves? I'm very happy with it, no doubt. Basically, just because we hit the 30% top line, that's amazing. And they're able to show that they're growing. Now, the one thing I'm not necessarily in love with is that the overall customer count is not necessarily accelerating or showing a turnaround in that sequential growth rate. So you can talk about the how much harder it gets to grow the sequential growth rate just because of the where is it? Here we go. Yeah, just because the baseline gets higher, right? So each quarter, plus 8%, plus 10%. 8% from 421 is different than an 8% from 453. And that's a year ago. So pulling off 6% from 593, numbers wise, that's still really good in comparison to what we see in the past. But at least to show you're growing faster down the line, because customer count is a leading metric, I think it's important for folks to understand that I think customer count is probably more important when it shows the scalability of Palantir and the hyper growth that we want to see down the line. But it's definitely not something bad for them to expand their existing revenue from customers today. And obviously, this creates more proof that they're able to actually deliver value to customers. Because if you do a renewal, more than likely you have information for yourself to figure out, it's actually better now for me to even sign a deal that costs more to me because I'm able to save XYZ. Or maybe even if it's not a number, maybe it's because you're able to actually pull something off that you haven't before, and you can take on initiatives that you couldn't. You could expand your business in a different way. So it's more than even just a number sometimes too. And cleaning up and something that doesn't show up immediately can, be very, very beneficial for someone. So expansion within customers is the other thing that I really like about Palantir, because yes, the scalability is there. They can take on someone when they sign them on. But once you're signed on and hopefully you're addicted to their product and you need it and you can't live without it, are you going to be willing to pay more money down the line because it actually has an ROI? And that's the strongest argument you can make for any enterprise software. So if you're going to direct to consumer, and I know a lot of people like to talk about consumer products for Palantir, it's not anything I care for them to pursue. And indirectly, they kind of already do that. They have set up themselves to do that in a way. But yeah, if you go direct consumers, people are not going to be as rational. Or because if you're an individual, you can take on those emotional things. You can justify paying a little bit more, even if it's inefficient. But if you're a company beholden to shareholders, you have management looking down your back, you have a group of the board maybe, you're more than likely going to take the numbers into account than, say, a B2C product. So if you're going to look at enterprises, you need to have the evidence to back it up. And then it's the nice to haves afterwards where you're able to say, because of this, we are also able to do that. So even if it's qualitative, we have the quantitative aspects to ensure that it passes the test. So everyone's happy on around the board, for example. So, and let me just double check, see if their website updated yet. Let me restore the chat as well. Very cool. Yeah, let me know, guys, in the chat. Are you guys excited? Right? I mean, I think a lot of people were not expecting this, actually. The 30% was, okay, they could probably pull off 30% if something happens. But more likely than not, if things keep going, at least they can hit the 28%, right? But I think 30%, even if it's a couple percentage point, that adds up over time. And it's definitely qualitatively wise, it changes, not changes, it brings back the story, essentially. We've got 30% growth again. I believe Alex Karp is going to tout that. There's no way that he's not, especially if they're touting that on their news report here. So let's look a little bit closer at these numbers then again. Yeah, 30% total here. Yeah, 726. I know a lot of other folks were talking about this for estimates, 720-ish. 730, I believe, was like, okay, that's kind of crazy. But if they can get to 742, I'm like, wow. But 726, I think, is very, very admirable. And they pulled it off, essentially. What I'm going to be curious about with the presentation is they're showing up the $1 million deals right now. Last quarter, they showed off the $10 million deals. So I just want to know if maybe they didn't want to share that, at least on the highlights page. But I think 1 million is actually pretty important to show. And I like to see this every time, right? If they do well here. 1 million is how you're going to get the smaller deals. And a million's a lot for someone to pay for. And a deal can technically be, is it 1 year? Is it 4 years? So the math does change, especially for the size of your business. But being able to get someone's foot in the door is important. This is what I want to see. I want to see more of these deals come in. New customers, of course, is more important for these deals, I'd say, because now you're actually expanding your base of customers you can grow upon later on. But as we saw with customer count, they did still do okay, but the quarter over quarter is not accelerating sequentially. So this is something that I think will be the main argument to look out for the next coming quarters. Sorry, I just had some water, but yeah, 6% is probably the one like negative thing, if you want to call it negative, but it's going to be overshadowed by the top line growth here. The other negative, and I say that in quotes, is going to be the GAAP net income, 6 cents. Let me see what that was last quarter again. $134. Yeah, 6 cents. So basically flat next to each other's next to the previous quarter. So flat in that regards. Obviously, in the year-over-year growth, it's going to be still pretty nice. Q3 2023, where are they at? 71.5 million. So they're around the same. Yeah, 100%, I believe that's what they advertised. Yeah, 100% year-over-year growth. So now this technically should be something easy for them to expand over time. I believe once they turn on the faucet, essentially, they can make money. They've already demonstrated that on a GAAP basis. But the focus should be, and they're doing this on getting on the top line. So I'm just trying to see if someone has something going on. Let's see. Yeah, 3:34 p.m. Live streams at 4 o'clock. I want to see if this link is live yet for their letters. Yeah, it's still showing August 5. If someone else can get, it is published. Yeah, I'm trying to see the results. Oh, there we go. Thank you. So I just had to refresh it. Let's see. Okay, English. It's the only language I need. All right, November 4, 2024. Oh yeah, this is epic, right? This is only the beginning. And I think this is important for him to frame it this way. They're pulling off amazing. Let's go. They're pulling off 30% growth, and he's saying that this is the beginning. So some people might see this as, oh, maybe this is the best that they can get, right? But at least from what he's trying to portray out to investors and the whole market is ensuring that think it's breaking out here. Yeah, sorry. Ensuring that this is still going to be continued on. They're seeing in the overall AI industry that making sure that people understand that this is still not stopping, right? People want to probably argue like, oh, how can this be sustained? And that's going to be the main argument. You told us before it'll be 30%, but you couldn't sustain it. Are you going to actually do it this time? So we'll see. 30% increase from same period. This is the opening. So obviously this means this is what he wants to emphasize. And I talked about this earlier. Yep, he just added another bar here to the chart. The trend continues. This is the quarterly revenue growth year over year. We're back to 30%. If you look a long time ago, 13% Q2 2023. I believe Q1 2023 was, I believe, in the teens, higher. So I guess picture-wise, it's not as clear cut. So I guess this is why they picked Q2 and have the 4 quarters plus the 2, so 1.5 years. Now, a juggernaut is emerging. This is the software century, and we intend to take the entire market. The unrelenting march of our business has been driven by an early and decades-long investment in technical infrastructure. I've talked about this in regards to the work of the government that is now making the large language models that have reshaped our world useful and valuable to large enterprises. We're also a member of the S&P 500. This was a monumental moment. People didn't think it was going to happen, considering maybe their valuation, right, or the way they went public. But either way, they're in, and their eligibility is still there. A goal that was most fanciful, and many in the market left us abandoning hope precisely at the wrong time. Our entry into the index comprised of the most profitable, significant corporate enterprises in the United States. And by extension, the world has been made possible by strength of our business and expanding demand for our software. In Q3 2024, we generated the largest profit. Yeah, so you could say this technically. They generated their largest profit here. It's still 6 cents per share, essentially, but I believe with dilution, right, you spread it over, it's going to be more money, even if it's the same per share value. Sorry. 20-year long history reaching 144 million net income. So this is the raw net income, not the EPS, just because it's the same last year, but there's more shares outstanding now, just so you're aware. And remain ready for anything that may come. For the first time ever, yes, now he's going to talk about free cash flow surpassing $1 billion TTM, ending third quarter of 2024, and then they got 4.6 billion sitting on their balance sheet. The U.S. market remains the core of their business. No surprise here. It's where we've seen institutions respond most rapidly to the promise of artificial intelligence as companies and governments agencies race to implement the technical infrastructure that is necessary to unleash the power of large language models across their proprietary and most valuable data sets. And with the release of AIP, transform their business. We've talked about this. 2022 is basically a monumental moment where we just decided, oh, well, OpenAI released ChatGPT. This is how AI works. And then Palantir's like, well, how do you want to do that securely, safely within your enterprise? We've done it before for the military. We've applied this in this way, in this manner. So we're going to do it for you at the enterprise. So, sorry, that tangent there, but we reached 499 million in US revenue across both commercial and government markets in the third quarter, representing an increase of 44%. This is the thing that is huge. Growth in the U.S. government business is surging as our customers embrace AI. Revenue from this market includes defense intelligence agencies, rose 40%, 15% quarter over quarter, 320 million in a 3-month period ending September 30th, 2024. Our revenue in the U.S. commercial swelled 54% year over year, 13% quarter over quarter. The 54% aligns to last quarter around 55%, but you got to remember the baseline is slightly higher. So pulling off 54% is still amazing for the U.S. commercial business. But that is the expectation that I want to emphasize. We are expecting them to do amazing in U.S. commercial. However, U.S. government was the big surprise there for me. Some people are saying we're going down. Still around the 12% after hours here in the mid 46%, $46 range. We got the chart here. Basically, they're getting more and more top line as well as profit. Now, it is the speed with which institutions in the U.S. in particular have adopted our platforms and artificial intelligence capabilities more broadly that has been, and we believe will continue to be the driver of growth As America once again forges ahead, our allies and partners in Europe are being left behind. So this is still the same. It's still the same where we're not focused on Europe. It's nice to see if we get money from them, and I like covering those deals because if it's not their strong part, at least money is still coming in from there, at least a little bit. But America is really, and the allies, of course, is what they're focused on. So their private and state institutions stand on the sidelines during the pivotal moment in economic history, while the relentless innovation of U.S. companies disrupts and reshapes global industries. Europe must adapt to opportunities and challenges of AI or risk ruin. So I'm not sure if this kind of like when you egg someone on, right? Like you guys are like gonna fail if you don't do it. Come on. And then obviously wink, wink, you can do what you want, but maybe Palantir is the solution for you, at least government wise. Try to utilize that. I know I haven't covered it too recently, but you know, with Germany and France, kind of the bigger names, right? They're U.S. allies. However, domestically, they're in the pursuit of we need to handle this ourselves. We need to build our own technology, kick out Palantir, things of that nature. So it's just interesting to see if this actually drives any business from Europe. But this has been a constant narrative from CARP as well. So now the commitment to risk-taking and innovation of America's enterprises is unparalleled in the world. We believe the rewards from the embrace of AI in the U.S. will be immense, both in terms of human liberations as well as economic prosperity. American influence in this unique hour comes not just from controlling the supply of AI, but also from the ability to strategically deploy the newest technologies across our most prominent corporations and institutions. Our unchallenged ability to channel and guide the demand for integrating AI seamlessly with essential data, distribution, and decision-making structures is what truly sets us apart. However, the shallow consumerism of the current age risks diminishing our ambition as a culture and civilization. We built this company to arm and defend the most significant institutions, not tinker to margins. And it's because of, not in spite of this ambition, this sense of purpose, and this desire to participate in a story larger than ourselves that we've arrived at this moment. So, of course, with the language that Alex Carp uses, right, it sounds like an epic like movie coming about, but essentially this is what I'd expect from him. And he's going to frame it this way. This is only the beginning. It's a way to show to shareholders that, or at least what he's trying to do. And I'm not sure if everyone still believes it, but I think a lot of people, at least in the community, who have researched about Palantir, their products, their customer base, and the financials, of course, but that this is still just the beginning, and we want to see accelerating growth, right? 30% is still an amazing symbolic achievement, as well as actual achievement in reality, quantitatively. But the reason for them being valued at over $100 billion, if we, let's see, around $47 per share, they're more than $100 billion. And being able to justify that in everyone's minds, and Carp doesn't have to actually care, technically he doesn't have to care, because he talks about this in his recent interviews about, we're always overvalued, or someone tells us we're overvalued, we're always maybe undervalued at some points, but he knows that deep down the mission and the products that they've built, it has something valuable to it, right? And we're still technically trying to see them execute, and this is the biggest bear case against them. If they don't execute, they don't prove growth is coming, or it's not accelerating, then what else is going to justify their valuation, right? So I think it's just really important that people know this is what they're trying to portray, and we'll probably hear this during the earnings call as well. So it's something important to note. This is what they want us to think going into it. Now, this was not a surprise to seeing the quarterly revenue growth chart here. So if you want to read everything with a fine magnifying glass, essentially he wants to say this is just the beginning, but it still looks amazing over time what we've done, and expect a continued trend of this, without actually saying that outright. So the other things too was their U.S. government business is amazing. And he, of course, points that out. Their U.S. commercial business is still doing great, but the government business, 40%. That is just not what I expected. So, being able to grow that year over year, and it's the thing that everyone says, oh, government, yeah, you'll have sustained revenue over time, but it's not going to be a growth driver. Well, Palantir seems to be showing off that they can make this a growth driver. So I don't know what to say at that point. We'll see if it continues, I guess. If you've also been a longer time shareholder, he's talked about the lumpiness of government revenue. So maybe we're in a euphoric period of time where we're just figuring out, oh, okay, maybe this is just one of those times where we're doing really well, but it's going to go back down. So it's just something to look out for in case, like I said, I view U.S. government business as like a bonus per se. Keep sustaining your typical growth, but when you have an outstanding quarter like this, like that's a nice bonus while commercial is still doing very well. So just make sure to keep that in mind. Now for the live stream, it should be happening soon. Let me just get this up so it's here. Yeah, it's not on yet, but lag. Yeah, 4 p.m. So we got 12 minutes. That's gonna come up. We got 1,500 people waiting. This will obviously go up. I'll do my preemptive like here. That's the only way you can communicate, but do your preemptive likes if you'd like as well for the earnings call. So you can watch it along with me. I'll make sure to mute my microphone when it actually is on. I should have the notify already, but you can also watch it here if you'd like. I'll make sure I'm muted for that. I'll be taking notes on the side, see if there's anything that stands out. Honestly, the biggest thing is they're going to talk about revenue growth, and hopefully they address something with customer count, because it is like they're still growing their customer count, but the sequential still seems to be dragging a little bit there. So, and for those who don't know what I'm talking about, the sequential here for total customer count is 7% for last quarter, but now it's 6%. So, but I am actually interested to see. Yeah, it's interested to see the presentation because they break it down to an easier way to digest, essentially. So, okay, 1 second here. Okay. Yeah, so it looks like this is not going to be published on their investor relations until maybe the call. Okay. So yeah, we'll see the presentation then when it's there. Just let me know in the comments maybe if I did miss it, maybe. Let me see. Where can you watch a live stream? It should be on their YouTube channel. I have it already here. I'm not sure though, because last time for the live streams, we had to I just get a notification and it's public on their account. But this time it seems that I had to register. So if you want to get it yourself too, just go to the earnings announcement. So it should be one of the recent ones. And then just go to live webcast and replay available. You could pre-register here. Okay, so I think they're just doing it a little bit different where they want to see who's coming in earlier. Right now on YouTube, it's showing as... Oh, it's under my... Yeah, it's not up on their channel. It's actually posted as unlisted. You'll get a link in your email if you go to the register link. Register link. So what happens, let me just show you actually really quick. Pre-register here. This is from the 1014 PR. Right here. And it's not like they're taking a lot of information, but I think it's a way for them to track as best as they can to see who's watching. And it said pre-register. So I'm assuming that they're not going to keep it private or unlisted the whole time. And when it starts, it'll be available for everyone. But right now, they might be just gathering who's watching, right? So you just put your information, email, put burner stuff if you'd like as well. But company... So I just did like my own, just for the YouTube channel, essentially the information. But I'm sure you could probably just do NA or something. And I think this is more for tracking purposes, not that you need necessarily something valid. And also, what I think too is that for prospective customers, right? This is probably not the typical avenue where customers like, oh, I watched your earnings call, now I want to sign up, because it's more of like the chicken and the egg argument. But yeah, essentially they just want to try to get information. Maybe they can get a lead here. You never really know, especially at scale. So it's important too, right? It doesn't seem significant, but if you get a list of 1,000 people, and let's see who's already in here at scale, right? It could be something significant. 1553 waiting, so they're at least pre-registered. I would say probably 95% are going to be like retail. There's going to be analysts, of course, financial analysts on here as well. Oh, started stream 70 seconds ago. Oh, there we go. So it's technically started. Let me get this open. Yeah, we got 9 minutes till the stream starts, though. Any music? No music. That's okay. But the stream has started now, so it should be actually live, so you don't have to worry about pre-registering. If we go to their YouTube channel. Yeah. So as mentioned, it looks like the pre-register was just for them to like figure out who's watching and if they're willing to get it, but it's available. I was just kind of worried in the beginning. I'm like, oh, usually I just have a link I can go to, or notification. Maybe I was just more ahead of the curve this time. So, all right, 8 minutes till then. We still have a couple minutes then to cover. Let me just open up this side here. So close this out. Another refresh. I know I just keep showing you guys this page. Yeah. It'll probably show up the presentation and such after it's on the call. Alex Karp's letter. So for those who haven't checked it out, if you go to the Business Wire PR, basically that's where we got all our information so far. Looking really good with that 30% growth, as well as continuing to just be profitable company, but having very healthy margins as a SaaS company. So if you're growing and you can keep the money that you're collecting, then that's a pretty good recipe for any business that you have. It's at that point, it's just about scale and how fast you can grow. And is this going to be something to expect? Management says it is. If you listen to a bear, they'll say, it's just a one-time thing. It's not going to happen. Or an ultra bull, it's like, this is just the beginning here. We can see something even higher. So we'll see if they even allude to that information. But I think one thing, as I was talking about that, I did not calculate based off their guidance. Let me see here. For Q4, 767 to 771. And for Q4, let me see. Oh, why am I here? Yeah, Q4 2023. Their revenue last time, 608 million versus 767 to 771. 771 minus 608, 163 divided by 608. So they, for Q4, okay, so I should have done this. I know I usually do this each time. They're only projecting, so we know they sandbag a lot each and every time they've been doing this, but 27% is the expected Q4 2024 year-over-year growth rate. That's the top end of things that they hit it. Obviously, if they go higher than that, it should exceed that. So let's just say that 608, if we do 30% on that, so if they maintain the same growth rate now, they're expecting 790. If we see some form of acceleration, so even if just 2%, let's just say 2%, I'm just picking this out of a hat, right? So 1.32%, that would be $800 million in a single quarter. If that were to happen, that's all speculation. But officially, guidance for Q4 2024 is 27% if they hit the top end range. So it's just something that I should have done at the beginning. I forgot to do so. I think what caught my attention was the full year 2024, updating that by $50 million. But either way, their company seems bullish. They're able to show that not bullish in the sense of the stock, but bullish just on their business in general, being able to continue growing. And I think if you want to take any pattern from this, technically that Q4 guidance expectation of 27-ish%, that's higher than the Q3 guidance that we had last time for that, where they're expecting 22% to 25%. And then we got 25 to 20 to 30% this time. But now we're doing 27%. So what is Q4 going to be? We'll just have to see. All right, 3:56. We have a few minutes. I got the link up already for everyone to see. I'll be playing this, and eventually they'll just start, but there's no music. But it is live, just so you know. So I'm gonna go on mute for a second, and then I'll be taking notes during the earnings call. Yeah, I don't expect any need to pause that. So you feel free to watch on here if you'd like, or open it up on your own if you're gonna review it later. Afterwards, though, I believe the call takes about 30-40 minutes-ish. We'll talk about the results, the presentation, what management talked about, the analyst questions. I'm assuming it'll be like other earnings calls. Dan Ives talking, Mariana. Yeah, probably the same suspected folks that we'll be seeing. So, all right. I'll take a break from talking and sit back, relax, and enjoy.
Good afternoon. I'm Anna Saro from Palantir's finance team, and I'd like to welcome you to our third quarter 2024 earnings call. We'll be discussing the results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our fourth quarter and fiscal 2024 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
Our results are exceptionally strong. Revenue grew 30% year over year in Q3, driven by an intensifying AI revolution that the U.S. is rapidly driving. Our U.S. business achieved 44% year over year and 14% sequential revenue growth. We are focused on deploying AI models in production amidst the commoditization of cognition caused by the rapid advancement in AI models. Our U.S. government business revenue growth accelerated to 40% year over year and 15% sequentially, while our U.S. commercial business momentum continued with 54% year over year and 13% sequential revenue growth. This AI revolution that is transforming industry as well as government is also transforming markets. In September, the S&P 500 added Palantir to its index, a testament to our exceptional growth, profitability, and market leadership amidst this singular era of accelerating technological progress. We're witnessing the commoditization of cognition with the rapid advancement of AI models. Almost all investment in the AI space has been focused on supplying and improving these models. What will differentiate the AI haves from the have-nots is the ability to maximally leverage these models in production by capitalizing upon the rich context within the enterprise. This is Palantir's focus. We see this in the results we're delivering for our customers. Those who embrace quantified exceptionalism through AIP are able to take advantage of the commoditized cognition in a levered way to advance their differentiation. In this winner-take economy, the divide is widening between those who are leveraging AIP and those who are not. At a leading global insurance organization, AIP has helped automate key underwriting workflows, reducing the typical underwriting response time from over 2 weeks to 3 hours. We implemented over 10 business use cases in just 9 months at Associated Materials, increasing its on-time, in-full delivery rates from 40% to 90%. At Trinity Rail, it took just 3 months to get to a functional workflow with a $30 million impact to its bottom line. Last quarter, we closed 104 deals over $1 million. The evolving deal cycle as we take customers from prototype to production is having a particularly phenomenal effect on the growth of our U.S. commercial business, which continues to see AIP-driven momentum both in expansions and new customer acquisitions. In U.S. commercial, we closed nearly $300 million of TCV, and customer count grew 77% year over year, compared to 37% year over year in Q3 2023. To highlight a few notable deal cycles, a large American equipment rental company expanded its work with us less than 8 months after converting to an enterprise agreement, increasing the account ARR 12-fold. A bottled water manufacturer, a specialty pharmaceutical company, and an agricultural software provider all signed 7-figure ACV deals less than 2 months after their initial boot camps. In our U.S. government business, we are outfitting our warfighters with advantages over our adversaries. Last quarter marked our U.S. government business's continued strength through the end of the U.S. government fiscal year. It was our strongest sequential growth in 15 quarters, driven largely by our DoD business's 21% quarter-over-quarter growth. We remain proud of our progress delivering the next generation targeting node through Titan, with our efforts fully ramping throughout Q3. Palantir is also delivering AI through Maven Smart System, allowing customers like the 18th Airborne to match the performance of what used to be a 2,000 staff targeting cell during Operation Iraqi Freedom to a targeting cell of roughly only 20 people today. Last quarter, Palantir signed a new 5-year contract to expand these Maven Smart System AI ML capabilities across the U.S. military services, including the Army, Air Force, Space Force, Navy, and U.S. Marine Corps. As Vice Admiral Frank Whitworth recently said, quote, "This partnership is tantamount to ensuring that we keep America safe and ready." The AI revolution is underway now. The chasm between the AI haves and have-nots is rapidly widening, and the whole world is watching. I'll now turn it over to Sean.
Thanks, Ryan. The divide between AI haves and have-nots is rapidly accelerating in this winner-take-all AI economy. What will differentiate the AI haves from the have-nots is the ability to maximally leverage these models in production by capitalizing upon the rich context within the enterprise. That's why our focus on delivering proof, not proof of concepts, continues to pay off. Years of foundational investments in our infrastructure and in ontology have positioned us uniquely to harness and deliver on AI demand. This is Palantir's focus. The market has been focused on AI supply, the models. We see this clearly in the progress, but also in the capital sunk into these models. Indeed, the models continue to improve, but more importantly, the models across both open and closed source are becoming more similar. They are converging, all while pricing for inference is dropping like a rock. This only strengthens our conviction that the value is in the application and workflow layer, which is where we excel. Tapping into this rapidly expanding pool of leverage from AI labor means more than just saving money. It means a massive acceleration of results for our customers. As Ryan mentioned, we have automated the insurance underwriting process for one of America's largest and most well-known insurers with 78 AI agents, taking a process that took 2 weeks to 3 hours. More than the labor savings, this presents the customer with an asymmetrical advantage in the marketplace to bind contracts before the competition has even gotten through 15% of their process. In U.S. government, we automated the foreign disclosure process for sharing critical and timely intelligence with allies from 3 days to 3 hours. The Center for Security and Emerging Technologies at Georgetown published a study on Maven that showed how the entire targeting and fires process can be done in Maven with 20 people. It used to take 2,000. There's a huge opportunity for our customers to automate the tail and liberate capital to reinvest in the tooth across government and commercial. We see enterprise autonomy as a key theme in our proof. Our deep investments in CJAD C2, Combined Joint All-Domain Command and Control, continue to meet their moments. First and foremost, Maven has powered responses to real-world events across the globe. This past quarter, the Army was the first military department, or MILDEP, to adopt Maven. We're happy with the progress that we continue to make with Army Titan and AIDP, and Palantir's role as the application integrator in the Joint Fires Network. Maven is our military's fight tonight solution. At a time when North Korean troops are in Ukraine, Russia is providing satellite intelligence to the Houthis, and Iran is launching ballistic missiles at allies. We are investing aggressively to expand the perimeter to give our warfighters the unfair advantage they deserve. Advanced multi-int sensor fusion, integrated logistics into fires, and large-scale command and control of swarms of autonomous systems. We announced Warp Speed last quarter, our modern American manufacturing operating system. We as a nation must reindustrialize to prevent escalating conflict and regain deterrence. Before the fall of the Berlin Wall, only 6% of major weapon system spend went to defense specialists, the so-called primes. 94% went to dual-purpose companies who were invested in both freedom and prosperity. Chrysler built cars and missiles. Ford built satellites until 1990. And General Mills, the cereal company, made weapons. Today, that 6% has become 86% when including firms whose only commercial exposure is in aerospace. We won World War II and the Cold War with an American industrial base, not a defense industrial base. And we need to bring that back at warp speed. And in addition to working with new champions like Anduril and Shield AI, we're also working with L3Harris and 2 other of the big primes to help them bend atoms better with bits. Lastly, we continue to invest in AIP as a developer platform. Green Suiters at the 18th Airborne Corps built 15 applications in our developer environment for their August warfighter exercise. Army Software Factory is cranking out software at units in Europe and even for the Vice Chief of Staff of the Army. The 101st built their search and rescue common operating picture to power Hurricane Helene response. built entirely by uniformed service members. We have released our JADC2 SDK, including examples and documentation for government and third-party developers to start building on at palantir.com/defense/SDK. And we have DevCon this month, our first gathering specifically for AIP platform developers across commercial and government, where we will be releasing a ton of new product investments, an enhanced OSDK, more ergonomic compute modules, the multimodal data plane, and much more. I'll turn it over to Dave to talk us through the financials.
Thanks, Sean. Q3 was an exceptionally strong quarter as revenue growth accelerated to 30% year over year, exceeding the high end of our prior guidance by nearly 450 basis points. As America rapidly embraces the AI revolution, this increase in AI demand has driven the outperformance in our U.S. business, which grew 44% year over year. Our U.S. commercial business grew 54% year over year and 13% sequentially. Our U.S. government business grew 40% year over year and 15% sequentially, a seven-fold increase compared to the prior year period growth rate and the strongest growth we've seen in 15 quarters. On the back of this strength, we are increasing our full-year revenue guidance midpoint to $2.807 billion, representing a 26% year-over-year growth rate. We delivered these outstanding top-line results while expanding adjusted operating margin to 38%, highlighting the strong unit economics of our business. Our revenue and profitability drove a 4-point sequential increase to our Rule of 40 score from 64 in the second quarter to 68 in the third quarter. We had an exceptional cash flow quarter, with cash from operations of $420 million and adjusted free cash flow of $435 million, representing margins of 58% and 60% respectively. On a trailing 12-month basis, we generated over $1 billion in adjusted free cash flow for the first time in the company's history. We're also proud to have joined the S&P 500 last quarter, underscoring our sustained profitability and growth. Turning to our global top-line results. Revenue continues to accelerate as we see continued momentum from AIP. We generated $726 million in revenue, up 30% year over year and 7% sequentially. Excluding the impact of revenue from strategic commercial contracts, third quarter revenue grew 32% year over year and 7% sequentially. Customer count grew 39% year over year and 6% sequentially to 629 customers. Revenue from our largest customers continues to expand. Third quarter trailing 12-month revenue from our top 20 customers increased 12% year over year to $60 million per customer. Now moving to our commercial segment. Third quarter commercial revenue grew 27% year over year and 3% sequentially to $317 million. Excluding the impact from strategic commercial contracts, commercial revenue grew 30% year over year and 3% sequentially. Third quarter commercial TCV booked was $612 million, representing 52% growth year over year and 62% growth sequentially. Our U.S. commercial business continues to see unprecedented demand, with AIP driving both new customer conversions and existing customer expansions in the U.S. as we continue to deploy AI models in production. Third quarter U.S. commercial revenue grew 54% year over year and 13% sequentially to $179 million. Excluding revenue from strategic commercial contracts, U.S. commercial revenue grew 59% year over year and 12% sequentially. In the third quarter, we booked $297 million of U.S. commercial TCV, representing 13% growth sequentially. Total remaining deal value in our U.S. commercial business grew 73% year over year and 7% sequentially. Our U.S. commercial customer count grew to 321 customers, reflecting 77% growth year over year and 9% growth sequentially. We generated $138 million in international commercial revenue in the third quarter, representing 3% growth year over year, but a 7% sequential decline as a result of continued headwinds in Europe and a step down in revenue from a government-sponsored enterprise in the Middle East. Despite those headwinds, we continue to build on our transformational work with some of our largest international customers, including signing a multi-year renewal with BP. We also continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond. Revenue from strategic commercial contracts was $9.6 million for the quarter. We anticipate fourth quarter 2024 revenue from these customers to decline to between $6 to $7.5 million compared to $20 million in the fourth quarter of 2023. We continue to anticipate 2024 revenue from these customers to be less than 2% of full-year revenue. Shifting to our government segment. Third quarter government revenue grew 33% year over year and 10% sequentially to $408 million. Third quarter U.S. government revenue accelerated to $320 million, representing 40% growth year over year and 15% growth sequentially. This acceleration was driven by continued execution in existing programs, new awards reflecting the growing demand for AI in our government software offerings, and favorable deal timing in the quarter, coupled with a government year-end cycle. Third quarter international government revenue was $89 million, representing 13% growth year over year, but a 5% sequential decline as a result of revenue catch-up in Q2 that we noted last quarter and less favorable deal timing. Third quarter TCV booked was $1.1 billion, up 33% year over year and 16% sequentially. Net dollar retention was 118%, an increase of 400 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q3 of last year, as we see the effect of the AI revolution in both industry and government. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. business over the past year. We ended the third quarter with $4.5 billion in total remaining deal value, an increase of 22% year over year and 4% sequentially, and $1.6 billion in remaining performance obligations, an increase of 59% year over year and 15% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 82% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $276 million, representing an adjusted operating margin of 38% and marking the 8th consecutive quarter of expanding adjusted operating margins. Q3 adjusted expense was $450 million, up 6% sequentially and 14% year over year, primarily driven by our continued investment in AIP and technical talent. We continue to expect expenses to ramp through the fourth quarter as we invest in the product pipeline and accelerate the journey from AI prototype to production. In the third quarter, we generated GAAP operating income of $113 million, representing a 16% margin. We generated GAAP net income of $144 million, representing a 20% margin. Third quarter adjusted earnings per share was 10 cents, and GAAP earnings per share was 6 cents. As previously communicated, we've aligned our compensation program with the performance of the company's goals, including its stock price. On the back of the company's strong performance, our inclusion in the S&P 500, and the increase in our stock price, we will continue to monitor if we become required to accelerate stock-based compensation expenses if certain market-based vesting criteria are achieved earlier than expected. Additionally, our combined revenue growth and adjusted operating margin accelerated to 68% in the third quarter, a 4-point increase to our Rule of 40 score from the prior quarter. Turning to our cash flow. In the third quarter, we generated $420 million in cash from operations and $435 million in adjusted free cash flow, representing a margin of 58% and 60% respectively. For the first time ever, on a trailing 12-month basis, we generated over $1 billion in adjusted free cash flow, representing a margin of 39%. Through the end of the third quarter, we repurchased approximately 1.8 million shares as part of our share repurchase program. As of the end of the quarter, we have $954 million remaining of the original authorization. We ended the quarter with $4.6 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q4 2024, we expect revenue of between $767 and $771 million, and adjusted income from operations of between $298 and $302 million. For full year 2024, we are raising our revenue guidance to between $2.805 and $2.809 billion. We are raising our U.S. commercial revenue guidance to an excess of $687 million, representing a growth rate of at least 50%. We are raising our adjusted income from operations guidance to between $1.054 and $1.058 billion. We are raising our adjusted free cash flow guidance to an excess of $1 billion. And we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Given how strong our results are, I almost feel like we should just go home. But You know, we've been saying since we went public in a DPO that we would build infrastructure to make America and its allies the dominant force in the world. We claimed to much skepticism that this would be done in a software product, that defense and commercial industry would be driven by software, hardware, hybrid technologies, that there were very few companies in the world that could actually do that these companies are basically only built in America, that the companies that have tried to do this that aren't Palantir are built by ex-Palantirians, that the financials of Palantir would flow from our products and our culture and our way of implementing, that we would bring violence and death to our enemies while targeting and general issues of safety better for our allies and for Americans, that we would stand by our values in thick and thin, including that the West and America are superior ways of organizing and that this is a great country and historically anomalous in its greatness, and that we would build a company with the best people from all over the world, but primarily from America, to power America and its allies. And even we are shocked by the 44% growth in the U.S. off of a $2 billion base. So this is not some speculative small base, 44% growth. Even we are happy to see that we grew 30%, to see the real reacceleration in USG to 40%, and to see the very, very strong results in U.S. commercial. Also, allied countries that have begun to realize that AI is the way in which to make their defenses superior in the face of brutal, heinous, immoral, and often terroristic enemies, where you need a superior form of fighting that's both safer for you and more dangerous for the adversary, and controls how you hit them and when and where, and allows you to maximize your results. It is also just jarring to see how America adopts the most important, most agile, and most impactful technology independent of who the purveyor and builder of that. We are building this company, and we believe we're at the beginning, and watching American adoption both in government and commercial, while not forcing us to change, while accepting that many of the ideas of how to make your enterprise better, whether it's insurance has been mentioned, oil and gas, any kind of complicated manufacturing, supply chain, healthcare, obviously defense and intel, that a new and different way of building software and implementing it, meaning the infrastructure, is where the value is, despite the fact that, as you may have noticed, many have noticed, that the experts that write about these things seem to believe the commodity, i.e. the LLM, is the valuable aspect of this, and that the actual asset, meaning how you manage the commodity, is the actual value. Despite great skepticism about our view of how to do this, the market seems to have decided what works, no matter how theoretically appealing the idea is of building software around how you may have learned to build it in business school, is to you as the person not buying the software. The people buying the software, who are allowing our market to grow at 30% in aggregate, 44% in America, 40% in U.S. comm, and dramatically 40 in U.S. government and dramatically in U.S. comm, are speaking with their feet and their implementations, and we're very, very proud of that. And I'm particularly proud to see the warfighter adoption of this. You see every part of U.S. government, including the White House, Congress, defense, intel, beginning to embrace the application of large language models in infrastructure, obviously something that Palantir is particularly specialized in. And we are really, I think, as a company, enjoying this phase. When you build a company over a long period of time, there are good and bad phases. But to see, in fact, our view of what it makes to make enterprises stronger and better show up in these dramatic results is super gratifying, and we plan to continue.
Thanks, Alex. We'll now turn to a few questions from our shareholders before opening up the call. We received a few questions on AI. How will Palantir differentiate its AI offerings from others, including the model creators? And how is AIP different, and how will Palantir maintain its competitive edge?
Well, Alex talked about how the models, the LLMs, are commoditized. But if you look at the models, you see that they're getting better, which is awesome. But they're also getting more similar across both closed and open source models. While they're improving, they're converging upon each other, all while the price of inference is dropping precipitously. And that's, so if you even look at these model companies, they have to build applications around these models to extract value. That's where we have a decade-long head start. We've been building the forge to create and implement AI applications at scale throughout the enterprise. And that differentiation starts with the ontology. Using the ontology to drive AIP across these applications. When you look at the legacy software companies, I'm not sure they understand it yet, but when you look at the innovative Silicon Valley companies, they recognize the wall of tech investments this implies that's in front of them that's going to act like a great filter.
I would say, kind of an addendum to that, well, first of all, I think people are beginning to recognize we were right, and these numbers show it. So that creates a dynamic of, okay, well, if you can actually extract value from large language models in any context, then clearly the company that does it is very valuable. And a lot of our customers, even a year ago, they were kind of skeptical of, can you make these things useful? I would say most of the customers I deal with are pretty skeptical. You can make large language models do anything but do a science experiment. And in a weird way, even though the models are improving, they're meeting up against greater skepticism among clients because clients have tried them and it's just a high school experiment. And then if you get to, so it's like the market and analysts seem to have put a lot of credibility into the models, and we do too. We think they're very valuable when managed correctly, when used in a way that an enterprise can understand. And one of the problems that people have is if you're not involved in enterprise software, it's very hard to understand how an enterprise actually works. You cannot take a large language model that gives you an ELO score of 1,200 and use it on targeting on the battlefield. There's a security model. There's a way in which the data is understood. There's certain things you can't share. There's places you would use certain models but not others. How do you bring that back to your corpus of truth to understand in a lethal context who dies and who doesn't? And you have very similar use cases in underwriting and in healthcare. And so understanding the actual way technically enterprise is driven as embodied by Foundry, as embodied by our abstraction layer on top of Foundry, which includes all those nuances, which we call an ontology, as powered by AIP, are all sorts of things that our clients are beginning to discover every day. Of course, the main way they're discovering it is, holy shit, I can do this in an hour that used to take 5 hours, or 50 hours, or I could have 2,000 people, or 20 and 10. And by the way, on the targeting on the battlefield, we've talked about basically 2 orders of magnitude in reduction of people, but it's also in many cases 2 orders of magnitude in the production of your ability to do things in an efficacious manner. There are whole global events now that would be very different without our ability to manage these things in our infrastructure. And that's also obviously generating a lot of excitement internally that spills into our earnings.
Thank you. Our next question is from Ryan, who asks, as Palantir continues to invest in new AI technologies and expand globally, how are you balancing these investments with maintaining or improving profitability and operating margins, especially given the current macroeconomic challenges?
We aren't just balancing, we're excelling. Revenue grew 30% year over year in Q3, 44% in the US in the quarter, and you couple that with our expanding margins in the quarter. We did 38% adjusted operating margin, our 8th consecutive quarter of expanding margins, and we posted 68 in the Rule of 40 score. At the same time, we had an outstanding adjusted free cash flow margin in the quarter, 60%. And so looking forward, we're raising guidance. We're raising guidance for adjusted free cash flow to an excess of $1 billion for full year 2024. We're raising adjusted operating income guidance to an excess of $1 billion, well over that actually, which represents a 39% margin in Q4. And we're doing all this while we're continuing to invest at the beginning of the AI revolution. There is an incredible amount of demand there, and we're investing in technical talent, and we're continuing to build out world-class product.
There's a Steelman version of this, which is, given how well you're doing, given you've really accelerated to 30%, given the U.S. is growing 44%, why don't you blow up your Rule of 68, which, by the way, to my knowledge, is the single best of comparable companies in the world, and significantly better than many very strong companies. So an average normal way of looking at Palantir would be like, oh, great, you have a 44% growth on a $2 billion base in the U.S., and you have a Rule of 68, get that 68 down to 50, and maybe you can grow. But in fact, that way of looking at a business misunderstands the way in which Palantir builds. We believe that by investing, and we know at this point, instead of trying to have 10,000 clients, all of whom hate you, it's kind of what people want, 10,000 clients that hate you, but they can't get rid of your product. We want a smaller number of the world's best partners that, quite frankly, are dominating with our product. And the way you do that is by not blowing up your margin and getting 10,000 salespeople. It's actually by going deeper on the product. And in fact, what we see is the deeper and better the product, the more we drive sales, the more we have our cultural singular advantage as Palantir, not as a commodity product. It's like, we are not a commodity. We do not want our customers to be commodities. We want them to be individual titans that are dominating their industry or the battlefield. And we reflect that in how we do things. We are not trying to be your average Harvard Business School preferred company with that reduces the margins, has a thin product, and then has a lower rule of 40 and presumably higher growth. By the way, I don't think you'd get higher growth than what we have. And honestly, although we of course are always pushing and want even higher growth, the people who tend to ask these questions tend to be modeling companies with 20% growth and lower margins. We have 44% growth in the most important market in the world, arguably not the only, but by far the most valuable market in the world, while having a rule of 68, i.e. the best in the world. And we're going to maintain the contradiction of having both high margins and high growth. It's not one or the other. They're actually interplayed, and they're not a contradiction. They power each other. That's how you know you have world-class products. That's what you see in your numbers.
Thank you both. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
A great quarter, and congrats to you and the team. So my question is, with boot camp conversions, has it even surprised you just how quickly, from a customer coming into a boot camp, potential customer, to conversion to mega deals, what you're seeing, and what do you think that says about your process and where we are in this AI revolution where Palantir sits?
Yeah, I think obviously the most indicative of what we're seeing and the impact is the results, the 44% year-over-year growth in U.S. commercial, 44% year-over-year growth in U.S., 54% in U.S. commercial, the sequential growth we're seeing. I think, I gave examples of boot camps where we're seeing multiple different customers across different industries that are going from the initial boot camp to a 7-figure ACV deal within a matter of less than 2 months. We're seeing that, we're feeling that in the conversations we have with customers in then our push to go from prototype to production and the expansions we're seeing at customers. And I'm seeing that, in the conversations, as we said, really it's going to be the AI haves and the have-nots. The haves are moving quickly, making decisions quickly, and adopting quickly. And I'm feeling that in the conversations we have with them in the conversions we're seeing.
I would just say that the most surprising thing is just how there's a small number of increasingly large number of customers, meaning that get this, and they are just moving really quickly. And anyone who's involved in the enterprise, so if you take company XYZ and then 5 people go to a different company, the first thing they do is pick up the phone and call us. And so it's just the way in which this just expands in the U.S. and in some other countries, but especially in the U.S., from anyone who touched this wants to use it in any part of anything they're doing. And it goes from one person, and then there's this transience in America where people really are moving to different companies a lot, and they're talking to each other, and there's just a willingness to take business metrics and use those business metrics against technology that's not ideological. And and if you look at even 10 years ago, there was no form of software that had this kind of adoption and this kind of readiness, and also it was conversely just not possible to show this kind of results this quickly. And we tend to focus on the results on the outside, but AI and large language models also allow us to scale our product on the inside. So one of the unfair things about this revolution is if you have business acumen and you have a product that is good or stellar, in my humble opinion, you can make it even better internally and externally. And so that allows us to also scale many, many more people to many, many organizations with the same number of people, as long as they're the best in the world. And so it's really this from touch to expansion however we do it. Some of it's boot camps, but some of it's just like, hey, I used to work at a company. I heard really good things about your product. I want it tomorrow. How quickly can you get here? What is the first use case you could do? And then the first thing that they always ask is, well, show me some of the things that you've done in other places. Like even cross-fertilization between government and non-government. I was at an important government entity a couple weeks ago, and they obviously Maven would be very useful for them. But then they start asking, well, what are you doing for hospitals? Could you use this on FOIA requirements? Could you use the same thing for managing our people? How could you make sure that our people are safe and happy? How do you move parts? How do we do procurement? A lot of the things so there's like a massive cost fertilization, even between verticals that otherwise would never talk. In the past, government use cases non-government use cases were just not things we were doing in government. And certainly from industry to industry, we did not have this, from real estate to supply chain to large hospital things. The use cases that they're doing inside our product, they are technically basically the same for us.
Thank you. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and then you'll receive a prompt to unmute your line.
Good afternoon, everyone.
Hi.
Hey.
We can't see you, but it's okay.
Okay. new camera and stuff.
Okay. Yeah.
So on government, U.S. government is up, like 40%. And this is in line with what we saw at USA. L3Harris, Anduril, Shield AI, but others were advertising Palantir logos. And they were like advertising partnership with you. What changed for them to actually want to partner? That's the first one. And then, Dave, if you don't mind giving an update on the strategic commercial contracts and how are you thinking about the remaining deal value as we see news about Lilium, but also a recent pickup of some like stock awards as a form of payment from these companies. Thank you.
On the first bit here, there's really two dimensions to what we're seeing as acceleration in partnerships on the U.S. government side. The first is something I've talked about earlier, which is Mission Manager. Really, how do we take not our software, but our software infrastructure, Rubix and Apollo, as radical accelerants for these companies to get to revenue, to service their existing revenue in a more profitable way, and expand their market access. So that's been just a clear win across the board. That's good for the government, it's good for these partners, and it's good for us.
I don't think Shyam's taking enough credit here, or Shyam, Aki, and others. So one of our biggest issues in the U.S. government would be just simply a friction coefficient. And we had the problem that although we are completely focused on helping the U.S. government and allies first and ourselves second, and that's one of the reasons most of us at the table are still here. There was a general perception a couple years ago that, basically, and you see it in our numbers, Palantir wins, and maybe we win too much and we keep winning, and people are like, well, Palantir makes all this money, someone else has got to make money. And one of the things Shyam and I would say Aki and others did a tremendous job of is like, look, we're in this for the supremacy of US and its allies, and we're going to prove this by opening up part of our products and allowing you to sit on government data, which is, lay people assume you could just put a product on government data. You can't do that. There's all these tech products we've built that allow you to safely and securely work directly with the U.S. government. And we've begun offering that to all sorts of defense tech startups and begun partnering with more established large integrators like L3 and many others actually. And the strategy there was, look, if we actually believe what we believe, let's show it. And this strategy, which Shyam led and Aki empowered and also kind of did incredible work on, has led to a situation where most people involved in tech innovation now view Palantir as their ally. And so instead of going into every meeting saying, oh yeah, Palantir's great, but their fearless leader is batshit crazy, and he might go off to his commune in New Hampshire, and whatever they were saying, it's now like, yeah, the products are the best, and we have great products. And so that's a really important shift, and that was a business strategy, and it really was done by others. And that has shifted our ability to get to market because, most people don't want to resist. They're not hating the player. They're playing with us.
Alex, is always a tough act to follow, but the second part of that I'll just close out with is really helping these companies with their production. In the same way that we help Airbus build every plane or Chrysler build every car, how do we help L3 and Anduril and Shield and all of these new entrants and existing primes build their weapon systems better, and in particular where they have fixed price, drive margin expansion as a consequence of doing that.
And then on the strategic commercial contracts, they're a tiny part of the business, right? Basically 1% of revenue in Q3. On the forward-looking metrics, it's even like it's quite de minimis, and the program ended 3 years ago. So, we can still answer the question. It's basically not relevant anymore.
Thank you. Alex, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
As usual, we're in it together with you. Besides making America even stronger and better, and our allies stronger, better, and all of us more lethal, besides protecting Palantirians and most ex-Palantirians, our individual investors are near and dear to our and certainly my heart. And I love it that you guys are winning. There always be ups and downs in building a business, but we're definitely fighting for you guys. And the decision to do a DPO, where which is essentially was a decision to make sure that individuals got to participate, and your willingness to spend time and look at what we're doing and actually look at the facts on the ground and not just to read theory has been crucial to Palantir as a business, and it's part of what makes Palantir great and also our nation so great. So thank you, and thank you for your support.
Thank you. That concludes Q&A for today's call.
All right, that's the earnings call. They emphasize what I thought. Well, actually, slight variance to that, and I'll get my screen up here shortly. I'm just moving some stuff around, but oh, that's not it. Let's see here.
Hi everyone, good morning.
Oh,
Very excited to be here.
turn that down here. Is this the right screen? Yeah, just a second here, just fixing my screen up. Oh, silly. Okay, I got my stuff set up. Here. It's the wrong screen. Okay, so the thing that I was thinking about mostly was that they were emphasizing US as a business together. So I think that's important to note. And we'll go over the call itself and everything. I got the presentation already up, but I have some notes, at least, and thoughts on the earnings call. So let me know if you agree or don't agree. So obviously, this was probably an easier call to have. Spectacular results, honestly. They emphasize the growth, as well as that this is just the beginning, as we saw in Alex Karp's letter. So I'm just happy that it didn't go awry. There's nothing. I mean, it should have been an easier call to have, to be honest. So nothing to tank the stock. And actually, I can pull up Webull here really quick. We're sitting around similar to when the results came out, around the mid $46 range. We saw at some point into 47. I'm not sure if it went into the 48s, but essentially, we're seeing some really optimistic sentiment around the company. And either way, I think they still have to technically prove themselves over time, right? This is a marathon, but you're going to have nice sprints like this where we see, this is speeding up. And of course, if this gets even faster, that's what I'm looking for. Now, earnings call wise, like I mentioned, they really emphasize the growth, the increase in guidance as well. I know a lot of you are like, it sounds like robots talking on there. I'm not sure if it was my audio or something of that nature, but maybe just because of the beginning when no one can see their faces, they might just be a little bit less animated. But for the call, I mean, Alex Karp for sure was his same self, same passion around everything. So, but Shyam Sankar did bring up some pretty cool metrics. Like one that really stood out was 78 AI agents at one of the large clients that they had implementing within like 2 weeks and 3 hours, I believe. Major large insurers that he said, and pointed out, the labor side of things. So, people will probably lose jobs or will have to retool themselves for the marketplace in an AI dominated world. But also just in general with the efficiency, accuracy of things that they can do, the speed to production, that's immensely valuable for anyone who's worked in a corporate environment or even non-corporate environment. If you're starting your own business, being able to pivot, implement something, take action, it can take a long time, sometimes even years, and it can be a very costly mistake if you go down the wrong path. So Palantir sells outcomes, essentially. Now, they were shocked themselves too. This was pretty interesting when I saw them. They're like, or what they said, like, we were shocked ourselves, 44% growth for U.S. revenue. And I probably should have been in this slide, but 44% year over year. So that's a combination of the commercial and government. And no doubt they want to highlight this because it's higher than the 30% for total, meaning international is dragging them down. But also the combination of now, commercial is growing pretty fast, 54%. But with government, it's not actually dragging down the numbers. They're above 44% with this combination of the two. So they really want to highlight this, that US is the place to be, albeit it doesn't matter if you're going after the commercial side or the government side. And then, as I noted too, and I keep repeating myself, this is just the beginning. So they're really trying to prep us and saying that, there's more to come for this. So, and then the questions. Now, this segment, it's okay. So they took some of it's of course filtered through from the submitted questions that I've shown before. And I did a whole video on that. I'm glad they don't talk about dividends at all. There's no need to even talk about that specifically right now. Okay. But the first one, how is Palantir differentiating themselves? It's kind of like a workaround answer in my opinion. And it makes sense, right? Just point to the results. We are someone that people call. A large enterprises think of AI, they think of Palantir. So we're going to at least call them. Right? It might not lead to a contract immediately, but they're the ones who are able to do this. And everyone thinks about AI models, right? And everyone talks about OpenAI, XAI, even Meta that we talked about earlier with Llama. And essentially, they believe, and we are kind of seeing this already with compute being kind of very expensive to do this, but all the models are getting better, right? And they're converging to a point where even the cost of, between each one and implementing it, like, yeah, there may be a difference. And if you're on the leading edge, it can be that advantage. However, we're reaching to that point where are they becoming commodities? Now it's like, if I use theirs versus the others, like I'm pretty much getting the same results. I can improve my business either way. So the value case loses itself, at least on the model side of things when it comes to LLMs. Now for Palantir, they're in a totally different ballgame, essentially, even though people like to tie it together. They're operationalizing these models. They're letting them use them. Now, the other question too, expanding globally, balancing investments, same thing, kind of work around, point to the results. We're doing great. We're not balancing anything, honestly. They're raising guidance. They're able to prove to companies and enterprises they can go deep with the product and expand that revenue. Then the other question, Dan Ives. So this was pretty softball-y in my opinion, but by their choices and who they allowed to come over with Mariana as well. We know they're both Palantir bulls. I didn't think we really learned new information, honestly, from either of their questions. His was just basically about boot camps and how quickly we're seeing results there. And then they pointed to the earnings. And then Mariana's questions about U.S. government, which Bank of America is very interested in. Similar kind of principle here. But I think what was more interesting was like how they can pull off that government growth. And they talked about L3 Harris and the partnership there that's been touted most recently, but also the other things they've been doing with defense primes and even startups. So Cart brings that up, that they're working with tech startups in the defense space. We see them trying to bring in more innovation to the government and military side of things for the U.S. because they believe it's the mission for them to improve, the defense of the U.S. and be able to keep the prestige of the United States, honestly. And you could even say economically, this is dependent that the United States needs a strong military to enforce their global power, which in turn enforces their economic power as well. But it also goes back and forth, as you can argue. But essentially, yeah, they're doing whatever they can to win business in the U.S. government and U.S. commercial space. And Alex Karp closes out with his famous thoughts and speeches to everyone, and about how he loves retail investors, and we're just doing things. It's a long journey, so he's not trying to necessarily say, "Oh, we're going to the moon right now," but essentially he's saying, like, you stay along for the ride, and you've been rewarded so far. So we'll see over time. I'm sure if we run into any more difficult times, hopefully not in the near future, but anything where expectations are not met, then maybe the earnings calls might not turn out so rosy or easy to go through. All right. So that's my thoughts on the earnings. And I'll also make a video of the full earnings information, as well as my thoughts, the earnings call, the presentation after. That'll be a separate video, more cut down for the get down to business type of folks. But for the live stream, I'm just trying to cover my bases. So we've been looking at the highlights already here. U.S. revenue is amazing. They're closing deals. They're still profitable, of course. It's not the highest in the world, but that's not the priority. But they are growing, as well as their rule of 40. They touted this multiple times, even in the call, showcasing that against their peers, they are way above the rule of 40, which, 40% is the kind of goal there, at least to be on par. Now, for the first slide, this is fresh for me, just so you know. So prototype to production. Sham Sankar was also referencing this kind of point in the beginning of the live stream. Essentially, these are anecdotal pieces, but still very important to see that they want to highlight this, right? 50 days to a 7-figure deal. They went from a boot camp. 50 days later, they got the deal signed, and now it's an enterprise-wide contract in discussion. Healthcare provider. So that was a bottled water manufacturer. Then we have healthcare provider. So 3 months, and this is from client inbound to 7-figure deal as well. So they come in, let's try out this use case. Let's test it out. Let's prove that Palantir can work. And then boom, we got a 7-figure deal. We don't know how long these are, if it's 1 year, 2 year, 3 year, whatever, but they got to be big. If you're signing a 7-figure deal and expecting a return on that to justify that to your board and management, then you're not a small player. And then same thing here, agricultural software provider. Sounds very niche, but less than 2 months, 7-figure deal as well. Boot camp, less than 2 months, they get the deal. And then expansion in discussions. So these are great pieces. Obviously, it doesn't necessarily mean anything since we don't have the details and how much dollars are going to flow in. But it still means a lot to sign a 7-figure deal in the span of months. Sometimes it even takes for an RFP to even be considered at that point, and you're still just collecting the information for certain companies trying to figure out who they want to partner with. Now, this is the other highlight. For over the quarter, they're in the S&P 500. Plenty of videos of that. I'm just glad I don't have to talk about that anymore, because every quarter I feel like, oh, this can be it. And then I'm like, oh, it happened. And that's pretty much it. Ukrainian government. So they keep touting this, as well as AI in general in the battlefield, mostly targeting. And we heard Alex Karp's comments on that, regarding the better they can do it. 2 orders of magnitude, I believe he said, in improvement. And they even talked about in the Maven targeting system as well. 2,000 people down to 20. That's what, 1%? Or yeah, 1% of 2,000 is 20. So leveraging technology can save lives. It can also, lose jobs, right? But it also means you can reallocate that personnel to something more valuable or more important, or something where you can save lives or have people do things that are safer on the battlefield, but have the maximum amount of impact. Then in Q3, Palantir signed a new 5-year, up to $100 million contract to expand Maven. We covered this a while back, but it happened over the quarter. And then this as well, they had a video on their YouTube channel introducing Palantir's visual navigation. I might have covered that, I might have not, but if you go to Palantir's YouTube channel, it will be on there as well. And then they like to put up the other anecdotal evidence as well from AIP Con. I believe these are all, these are all from presenters. So it's not necessarily new information here. So if you've watched the AIP Con events or my coverage of it, essentially they have nice little snippets of like, oh, here's had some operational improvement here, certain percentage, certain dollar savings, certain time savings, certain expansions, things of that nature. So it's always great to get, you could talk amazing about a product, but if your customers have specific numbers to share, that does take some guts as well, because now you're putting yourself in the spotlight. And if someone wants to double check that, and hopefully you did your due diligence, it's a big thing when a customer will actually disclose numbers of any internal operations. Cool. Now let's look at the graphs here of each of them. GAAP net income, as I mentioned, so this is not expanding as fast, but for me personally, I still just care about this being a buffer and keeping their S&P inclusion. Focus should be on top line, but as long as we're profitable, maybe in the future expansion of this will become the main priority. And that will help with any valuation models of the traditional sense at that point. But I mean, if you look at it right now, this will always be a huge ratio just because that's not even the focus of management to expand. Operating income, this one I think is probably more important for people to just watch out for, just because when we get to that point, they're not doing any financial engineering. There's no stepped up basis that we saw for the first time that they had for profitability and the GAAP net income side. Because they were negative operating income at that point. But that was a while back already. I feel like that was 7 quarters ago or 8. And then Rule of 40. I mean, expansion of this is actually not necessarily even needed. But this just goes to show that with a baseline of 40 with your similar competitors, it means that your business is in a prime position to, even if you're not winning, and I think they're winning right now, essentially means you have flexibility, right? You're growing, but you also have great margins. And they'll have a chart later on, I'm assuming, with the breakdown. But that's already added up together with the growth. So first revenue growth chart they show is US combined. So this really shows that they're trying to focus on US now. And they don't care regardless if it's government or commercial now. It's not like there's one bright spot or the other. As we've seen, both are doing great. So they want to maximize what they're showing off to their investors. I was trying to emphasize it so much. 44% year over year. Quarter over quarter is 14%. Obviously, there's different seasonal things that happen here. But that's always going to be lower because of the higher baseline. But 44% for U.S. commercial combined with U.S. government. And then here's the breakdown of U.S. commercial and then the U.S. government. Still 54%. Last quarter's was 55%. They are guiding for 50% for Q4. So it just means that it's not necessarily, well, we've seen that they've sandbagged. So we'll see how it actually turns out and if they end up in the mid 55s again. But the baseline is actually technically higher. So if they can hit 54, that means they're still growing much more, but not necessarily at a faster rate. Now, U.S. government revenue, 40%, amazing, spectacular. Commercial revenue total, 27%, and then government revenue total, 33%. So there's kind of a weird flip of the switch here. We know the baseline is higher for government and it grew faster. So that's why they're very optimistic and they like including the government right now for the overall revenue. So that's really like the main highlight I actually was not expecting. But it was, as I said, could be an X factor. Now, total revenue growth here, 30%, still amazing. Excluding the SPACs, 32%, still amazing. U.S. commercial count. So this is specifically on U.S. commercial. We have a 9% sequential. It is a higher baseline as noted, but it is something that I wish that we didn't see a downward trend still, because if you are a growing company that's very fast to acquire new customers, I would expect that to be faster than the revenue expansion that we're seeing, because it should be a leading metric, right? So I'm not sure if this means anything yet, right? Because we're still in a downward decline. We're still downward decline in sequential growth, just so you know, but we're still growing the U.S. commercial customer count. But it is important to watch out for because it's their bread and butter and they're highlighting it. The 6% here for the total customer count, but they are at 629 customers. So if they can keep this up, this will be nice and probably hit 700 in the next 2 quarters. commercial customer count here. So this is inclusive of international with domestic US. So 7% sequential is still better than the 6% of the total customers. So that means there is a factor in the number of customers internationally. 104 deals, like I said, this is higher. 16 deals were at least 10 million. I have to double check what it was for Q3, but they were touting this one here. But in the later video, we'll take a closer look, and I have a chart actually over time showcasing this. 4.6 billion cash. I mean, you gotta love it. The flexibility's there. The thing that a lot of folks, and I'm actually in the same camp too, is like, if we can actually deploy this cash in a meaningful way, can Palantir boost these growth rates, right? I'm okay with actually a little bit of pain in regards to margins if they can expand their acquisition of customers. They've already demonstrated that with their existing base, they can expand renewals, get more money for, providing more services, or just because they're that much more important and the trial period's over. But we did actually experience maybe them attempting to do this with cash. I believe it was a couple quarters ago when they were, or maybe it was 3 or 4. I'll have to remember, and I'll look that up. But they were ramping up their sales staff. We weren't seeing results. They gave it a couple quarters, I believe, and then they're just like AIP boot camps. And then this is when the revenue actually started expanding more. It might just be the nature of their product where throwing cash at it might not actually be the solution. Or they have to throw cash at it in a different way, right? So we know that they've been doing more AIP con events. They've been doing boot camps. It's very untraditional route to expand a SaaS company. However, it seems to be working for Palantir. So why wouldn't you double down on that? Maybe it doesn't cost that much, but maybe if you actually throw more money at it, you can even supercharge that too. So it's hard to know from the back end, at least, or not the back end, sorry, from the front side here, where we're looking into the company and trying to figure it out, if it's even something they can solve with throwing a lot of money. But in the end, $4.6 billion means flexibility, no debt, essentially, unless you include the short-term debt on the balance sheet, but that's like accounts payable and stuff. They should be fine. Now, guidance, as I mentioned, on the low or high end here, I believe it was 608. We're basically pointing for 27% guided. Remember, we were pointing for 25 or 26% for this quarter's results, and we ended up at 30. Before, they were guiding for 22%. This is for Q1. They were guiding for 22%, and they hit 25%. So if they're guiding for 27%, are we trying? I'm not trying to assume, but speculation wise with the pattern is, are we looking for 32% growth? 32% growth is interesting because that's when you hit a $800 million quarter. So that'll be interesting, but we got to wait up for that essentially. So 3 months from now, we'll see in February. Full year, they raised us by about $50 million. The important thing is that this is by the bottom line too. So it's not like they just changed the upper end, right, and played it safe. They're pretty confident, and I'd say with 1 month of Q4 information, they're pretty confident what they're going to hit for full year 2024. And hopefully they're sandbagging this, and you're going to get more than the 2.8. If you can get into the 2.85, that would be really nice. But either way, management is rosy on the picture. They are really trying to make sure that folks know this is the beginning. Even though they're great results and we've been working towards this, it seems like this is just the start, and they are expecting even more compounding on top of this to be amazing. So, and then the rest is the appendix here. You can look at this in more detail on your own, but it is posted already on the financials. And I think Rule of 40 is here. I know someone asked about seeing that. Rule of 40. Oh, maybe it's not. Oh, here we go. Yeah, Rule of 40, it just gives the breakdown. We saw this throughout the thing, but you have the 30% here, and then you have the 38% for the adjusted operating margin. That's how you end up at the 68%. It's just an addition of the two, and it's a rule of thumb measure for 40. But it's something that for other software companies, they try to compare. So it's comparable at least to see, is Palantir doing better than their peers in regards to their operations and growth? And they're beating it by a long shot. So those are the big highlights there. I know we kind of blew through this presentation, but as I noted, U.S. in general. So not even just breaking down between commercial and government is the conversation anymore. Oh, and I didn't want to forget this too. I took a note. They also purchased back some shares as well, a very minuscule amount. But as noted, it's 1.8 million shares throughout. Let me just see if they have the SEC filing posted. Let's go to the news. Should be in here. Let's do repurchase. Yeah, repurchase. They purchased about $46 million. Like I said, for me personally, they're already diluting anyways. As for stock-based compensation, this is more symbolic, showing that we're going to buy back shares, and it looks like they're willing to buy it back even throughout the activity of Q3. And we know at least throughout recently for the price of Palantir, and looks like we're still holding that 46, maybe into $47 range. But for the past 3 months, Palantir has been trading at these levels. So I mean, they're willing to purchase shares at this price. I know it's inconsequential dollar amount wise, especially in comparison to a $4.6 billion cash reserve, but they're still willing to throw some money at it. And I don't care necessarily for them to accelerate this. If they become a more mature company later on where we know that financial engineering is needed, and that's a natural life cycle of a company. It could happen in 10 years, 20 years, 30 years. Maybe it never comes. But for Palantir, I'd hope that never comes. But if we get to that point, that's when I would care more about the share buyback program. More, actually, what I care about in the more short term is the reduction of stock-based compensation over time. So if we look at that, I'll cover this in the main video, but essentially that's the concepts there. It's like, I don't need to rely on share repurchases to boost the share price. I'd rather just have them operate as efficiently as possible. Whereas like if they get to the point of people just want to join Palantir and they are the best and brightest and they don't even need as much stock, that's going to be a win-win for investors. But also, you can always make the argument, will they be as motivated because of the less ownership? So maybe it's just something naturally we have to take care of over time, and maybe it'll be very slow, but I'm not worried about it as long as they keep on producing results like this. So, and I would do that. I think most folks would be the same way too in their own business. You're willing to give up a little bit of ownership in order for that person to feel that whatever they do makes a difference. It's totally different than if you're only reliant on wages and then you come along something better. You don't necessarily have a stake in the company. So we'll see over time how that plays out. If anything unexpected, like, I don't know, would they buy a bunch of shares back, or maybe they find a way, because they did bring it up in the earnings call as well about the stock-based compensation and looking at ways that reflect the market performance. They may have to adjust those. If I had the S, yeah, if the SEC filing was there, yeah, here we go. This one, right? No, this is the filing that they're going to file. Okay, so we'll see when it comes up. They usually have a blurb or a paragraph about stock-based compensation. More recent change to that was based on the stock price, and hitting up to $70 or $50 minimum and then $70 maximum for employees to take care of that. I'll have to double check the numbers as well, but I think it's important to see this may actually change over time on how they're going to motivate their employees, especially as they hire new people on. Typically, the earlier you're on in the life cycle of the company, the more at stake you have, meaning you can lose your job or you don't perform as well, but also you get more ownership. So I'm assuming as they bring more new people on, they're not going to be as diluted as much, or not be as a big as a factor in dilution for us. But it may always be a part of the company just because of the pure ownership aspect that can help motivate people. I think it helps. I have it in my own company with options that have vested mostly. But there's always that uncertainty, right? Especially if everyday life and your cash is at stake. So, but yeah, I appreciate everyone tuning in. I know this is a long live stream, 2.5 hours. We covered everything. I will make a summarization video Probably later tonight. I'll probably come out when most of the U.S. audience is asleep. But maybe if you're out in Europe or something, it'll be out there fresh in the morning for you. So I really appreciate you guys jumping into the live stream, watching and listening to me. And I'll see you guys in my next video.